think. So as time goes on with me, that number could go down. So we might as well start. Great. Well, welcome everyone to the Committee on Taxation. We're meeting today to have work sessions on, I believe, 5 or 6 bills. Today's Pension Day in the Taxation Committee. We'll begin with introductions, and we'll start with Senator Libby.
Morning, everyone. My name is Nate Libby, and I proudly represent all of the people of Lewiston in the Maine Senate.
And Senator Pouliot.
Yeah, Senator Matt Pouliot represents Senate District 15, the towns of Augusta, China, Oakland, Sydney, and Vassboro.
Representative Carmichael.
Thank you, Mr. Chair. Mickey Carmichael, I represent House District 137, which is 22 communities in Hancock, Washington, Penobscot counties. Thank you.
And Representative Gramlich.
Good morning. Thank you, Senator. I am Lori Gramlich, and I represent House District 13, which is the lovely seaside community of Old Orchard Beach.
And Representative Hanley.
Thank you, Senator. Good morning, everyone. I'm Jeff Hanley. I represent District 87, which is Pittston, Alna, Westcasset, and Randolph.
And see, Representative Kryzak isn't with us yet. Representative Matlack.
Good morning. I'm Ann Matlack. I represent House District 92, which includes the communities of Cushing, Thomaston, South Thomaston, St. George, Matinicus, Creehaven, and the Musselburgh Islands.
And Representative Perry.
Thank you, Mr. Chairman. Good morning, all. I'm Joe Perry. I represent part of Bangor and part of Orono in the Maine House.
And Representative Sachs.
Good morning, everyone. My name is Melanie Sachs. I'm honored to represent House District 48, which is Freeport and part of Pownell. And Mr. Chair has just notified my bill in judiciary is up first. So I'm going to step away briefly and we'll be back as soon as I can.
Excellent. We'll see when you
Thank you.
get back. All right. And Representative Terry.
Good morning. I'm Mo Terry. I represent District 26, the western side of Gorham, and I serve as House Chair.
And I'm Senator Ben Chipman. I represent Senate District 27, which is most of the city of Portland. Also with us is Julie Jones, who's our analyst, and Avery Page, our committee clerk. So we're going to have work sessions on, I think, 5 or 6 bills today. We'll first take up LD 136. Then we'll take up LDs 1145, 1227, and 1413 together, since they're all very similar. And then we'll take up LD 1184 and LD 1243, which are also somewhat similar. So with that, we'll open up the work session on LD 136. This is an act to increase the maximum pension deduction for state income tax. And we'll have our analyst, Julie Jones, walk us through this bill and answer any questions we might have.
Thank you. Yeah, we're about to dive into one of the more complicated areas of income tax relating to the treatment of pensions. LD 136 is the simplest bill that you'll review today. Under current law, Maine has a pension deduction, sometimes referred to as an exemption, but under Maine income tax law, they're really deductions, technically speaking. Well, technically speaking, they're subtraction modifications, but we usually refer to exemptions as things like personal exemptions. Things that are deductions from income are usually colloquially referred to as deductions, but sometimes also referred to as exemptions. So you'll see both terms used. But the main pension deduction is $10,000 reduced by the amount of Social Security and railroad retirement benefits that a person receives. I don't know how many people know about railroad retirement benefits. They're a federal parallel to the Social Security system for people who work in the railroad system. There's a special federal program relating to the type of benefits that they receive, which is a parallel to Social Security. So they receive railroad retirement benefits instead of Social Security. So the two programs are generally treated the same. What LD 136 does is to provide a change, an increase to that $10,000 amount of the Maine state income tax deduction. It would provide for, it would gradually increase by $5,000 a year from the current $10,000 to $35,000 by the year 2025. And after that point, the amount would be indexed for inflation. That makes it a simple bill. I don't know if you want to talk about that one first, or you want me to talk about maybe all of them before you start to talk about,
Yeah,
discuss what you want to do with them.
I think we were going to take that one up because it is different than the others. The three bills around main state employees retirement system pensions we'd take up together as a group, and then Representative Wadsworth's bill and Sampson's bill are also similar, so we thought we'd group them like that. This one is, I don't think there's other bills that are trying to do what this bill does, so we thought we'd take this one up first, and then take up the others in groups.
Okay.
Does anybody have any questions or discussion on LD 136? Go ahead, Representative.
Yeah, my question is, Julie, how long has the $10,000 deduction been in place? Has that been around for millions of years?
I don't remember it. We do have people here from Maine Revenue Services. Mr. Sagasser and Ms. Popadak are here. They may recall. I do not recall the exact date. It's been that way for a few years, but I'm not sure whether it's 5 or 10 at the moment.
Maybe Ms. Popadak might have a good memory of that, or maybe. Can we ask her to come over?
Sure. Welcome, Ms. Popadak.
Good morning. Good morning. So for tax years beginning on or after January 1st, 2014, the cap was raised to the $10,000 limit. Prior to that, it was $6,000.
It's $6,000 for a long time. Sorry.
It was 6,000. I have some notes here that starting in 08.
Okay. So 08 to 16. Okay, got it. Okay.
Any additional questions from members of the committee for Ms. Popadak?
I don't have one for Ms. Popadak, but I do have one for Julie.
Yeah, go ahead, Representative Terry.
Oh, actually, never mind. I see that it is subject. Is it currently subject to an annual inflation rate?
No,
It's not. Okay,
no.
gotcha.
Additional committee discussion on LD 136. Representative Hanley.
Yes, it's my bill, and I like simple bills. So my suggestion as an amendment to this bill to make it even simpler is to remove the cost of living indexing after $35,000 is reached, because that limit could always be addressed by another legislature if they needed to. So I'm offering an amendment to my own simple bill to make it even simpler.
Okay, so I guess I have one more question.
So go ahead, Representative Terry.
So there, these folk, the pensioners, or folks that collect this are also get the standard deduction off of their income tax as well, correct? Yeah.
Yes.
So this is an additional 5,000 per year. Okay.
Yeah, 10,000.
Yeah. From 10,000, additional 5. Okay. So can I ask Representative Hanley a question? Is that okay?
Sure.
So I apologize for that. Maybe I missed this initially, but I'm wondering what problem this solves, Representative Hanley.
Well, it solves the problem of taxing an income. My personal preference is I wish we didn't tax incomes at all. So whenever we have a chance to stop taxing what people earn, I always approach it from that angle.
Okay.
So there are other ways to bring revenue into the state, and income tax is always the wrong way in my philosophy of governing. So
Okay.
that's,
Gotcha. Okay.
So Representative Hanley, is this, I mean, more or less a way to kind of chip away at the income tax? You know, because you'd rather us not have it or not have very much of it?
yeah, in a perfect world, I wouldn't tax anyone's income at all. I would tax what you spend and not what you earn. And that would be a more logical way to fund government activities. But so, yeah, if you want to use the phrase of chipping away at income tax, yeah, sure. But also it's directed at a group of people that when they move to the state, they usually move here and bring a benefit to the state. So I encourage that. And so that this is just a way to keep that ball rolling.
So
Hope
you
that
think
answers your question, Senator.
I mean, you think this would bring more people to Maine?
Very possibly, yes. You know, I mean, and the ones that are here, it stops punishing them, not punishing, but stops taxing them on items they shouldn't be taxed on, an income that I feel they shouldn't be taxed on. So,
Representative Carmichael.
I have a question for Representative Hanley, if I may.
Sure, go ahead.
So the people, I understand your philosophy, agree with it greatly, but are the people that are receiving pensions being penalized above what, you know, everybody else, like Social Security people or people who are not receiving pensions, are they being taxed more?
I can't answer that. I don't know. I know that on Social Security, I don't get taxed on my pension, which is Social Security. And I just feel, like I said, that we shouldn't be taxing incomes of any type anyway. So when I had the opportunity to promote this legislation, it's just building on that philosophy, not taxing income. And I don't know the tax structure for other pensions. And I know because we're trying to eliminate taxes on state pensions as well. So I'm all for that also.
Representative Terry.
Thank you. So I'm all for eliminating state folks that live here already. I'm all for eliminating the way that we're doing, or fixing the way things are going now. For folks to moving to the state, though, I'm not super comfortable with that, honestly. I think we don't know what a lot of the tax structures are in other states for folks that are moving here. Perhaps they haven't been taxed on their pension as it goes into their accounts. So, you know, they could be, and I guess that goes with the philosophy of Representative Hanley of not having any taxes on income at all. But the fact of the matter is that we do have an income tax here in the state. To me, I would rather give the break to those that already live here. So I guess I would like to make a motion ought not to pass. Yeah, I'm going to make a motion on not to pass.
Okay, so we have a motion not to pass. Is somebody seconding the motion?
Second.
Seconded by Senator Libby. That doesn't preclude any discussion. We'll continue to discuss the bill. I think you had your hand up first, Senator Libby, followed by Representative Hanley.
Thank you, Mr. Chair. I just in the context of the other bills we're considering today, you know, the folks that have gone into public service do face a significant penalty for doing so with respect to their retirement earnings and the Social Security offsets that folks have been working with Congress for years to try to address. And I think everyone around the horseshoe knows Congress doesn't always move quickly. So, you know, in terms of trying to provide some tax relief to pensioners, I don't believe we can provide the break to everyone at this time, given the fiscal note of Representative Hanley's bill, which is probably going to be 70, 80, 90 million a year. And then in addition to some of the other bills that we hear in a bit, could be in the same price range. So for me, it's a matter of, trying to decide what we can do with the resources that we have, understanding we may not be able to get all of these bills to the finish line. So for that reason, I'm going to oppose the bill, but certainly appreciate what Representative Hanley is trying to do here.
Additional discussion, Representative Hanley.
Yes, thank you, Senator. I just wanted to answer Representative Terry's concern about giving a break to out-of-state pensioners. This bill does not give a break to out-of-state pensioners. They are Maine residents with an out-of-state pension. So they have to be residents of Maine in order to gain this benefit. So again, just wanted to clear that up. Thank you.
Sure. And they would be moving here, correct? I mean, it seems to me, it sounded like this was a tool to encourage folks to move here, which I do appreciate. I think that we have a lot of folks that have already.
And if I may, that's not the intent of it. The intent is to stop penalizing people that do live here. They are Maine citizens now.
Yeah.
This is the intent of that bill.
Gotcha.
Additional committee discussion. Well, seeing no discussion, we have a motion on the table of ought not to pass. All those in favor of the motion, please signify.
Okay, for those in favor of the ought not to pass motion, I have Senators Chipman and Libby, Representatives Terry, Collings, Gramlich, Matlack, and Perry.
Okay, all those opposed?
For those opposed, I have Senator Pouliot, Representatives Hanley and Carmichael.
Okay, and what's the report for the minority report?
It would be ought to pass.
Ought to pass is amended?
Yeah, and that's add my amendment, my friendly amendment, which is naturally I'm friendly to it, is my own amendment. So.
If not to pass is amended using the friendly amendment plus the fiscal note?
The physical note, yeah.
Yep. Great, so that will close the work session on LD 136. And now we'll open up the work session on LDs 1145, 1227, and 1413. And we'll let Julie explain these bills and the differences between them. They're all fairly similar, but there are some small differences that Julie can explain. I forgot to mention, ask Avery, are any of the sponsors of any of these bills in the waiting room if they want to come into the meeting to offer any additional information? I know that.
Yeah, I'm checking that now.
Member of the committee, but if Representatives Dodge, Warren, or Senator Rafferty are in the waiting room, if you could bring them in, they may want to offer additional information.
Representative Dodge is here.
Okay, great.
Okay, ready?
We're all set. Go take it away, Julie.
Okay, thanks. Before you talk about these bills directly, I think I need to say a little bit about the relationship between Social Security and pension systems, because these bills all relate to that relationship. And it's very complicated. And I know at the public hearing, there were things in the testimony that were misunderstandings perhaps of the way the system works. So I hope I can get this right in my explanation of it. But basically, the very basic treatment of pensions is, assuming that a person works for an employer who provides a pension program, ordinarily contributions are made to that pension program while the employee is working. The employer makes some contributions usually, and the employee makes some contributions. Under federal law, the way the employee works, the employee retires, receives a pension. employer contributions are really do not have anything to do with any of these bills. They relate to the employee contributions to the pension system and how those contributions are treated for income tax purposes. Under federal law, ordinarily, those contributions are considered to be made from employee income. Therefore, income includes the contributions. And barring some other treatment, they would be subject to tax at the federal level to the employee when they make the contributions while they're working. The federal government, a while back now, set up a special system for government pensions. Government pensions have special treatment under federal law anyway. State and local governments, I think, are allowed to adopt pension programs where the employees do not have to participate in the Social Security system. So, and Maine does this. A Maine state employee, I'll use me as an example because it's just easier to say me than to try to create some fictional employee. But as a state employee, I make contributions to the state pension system. The state makes contributions on my behalf. And when I retire, I receive a state pension. No one contributes to the Social Security system with regard to my employment for the state of Maine. So there's no contribution made by the state. There's no contribution made by me to Social Security. If I have work outside of the state of Maine, and I do have a little, I do have enough to actually qualify to receive a small amount of Social Security. So I am a state employee who, when I retire, will receive both the state pension and Social Security. Some state employees, and most particularly teachers who are covered under the state pension system, many have only worked for the government employer and only receive the government pension when they retire. They do not receive Social Security. Okay. Next complication. A few years back now, don't remember exactly how long, the federal government decided to enact a special treatment of employee contributions to the state and local government pension systems that do not participate in Social Security. They're called non-participating systems. So if I say government, it's not precise. Non-participating is precise. I try to use non-participating, but think government when I say non-participating. It means a government system that does not participate in Social Security. It is a local government, state and local government choice, however. The state of Maine chooses not to participate in the Social Security program. Many states, in fact, I think most states at this point, have a hybrid pension system where their employees do contribute to Social Security and earn Social Security credits, but also contribute to a separate pension the way perhaps a private employer has a separate pension. And obviously in a private employment situation, that both the employer and the employee are going to be contributing to Social Security. What the three bills that we're talking about under this grouping address is the fact that under Maine law, all Social Security benefits are exempt from taxation. However, there's only a $10,000 deduction for pensions. So if a person working for the state of Maine has no Social Security and their pension is their state pension is say $15,000, they're going to get the $10,000 state pension deduction, but they're going to have to pay state income taxes on the remaining $5,000. If they are receiving Social Security, their Social Security will be exempt. A person in the private sector is going to receive all of their Social Security exempt, plus $10,000 reduced by Social Security as a pension deduction. So if a person in the private sector is receiving a pension of $15,000, they're going to get $10,000 reduced by their Social Security. If they're getting $8,000 in Social Security, then they're only going to get a $2,000 benefit from the Social Security. Basically, they're only going to get the $10,000. They're not going to get more than that. Well, the lesser of the amount of their pension, or $10,000. But so what these bills provide is that under LD 1145 is the simplest of the three. It would provide a 100% income tax deduction for retirement benefits under a non-participatory system. So if I retire, all of my state pension would be exempt under this bill, in addition to all of my security being exempt. The other two bills, LD 1227 and LD 1413, I've read quite closely, and I'm fairly certain that they're exactly the same. What they provide is that an employer would be equal to the lesser of their non-participating pension, or an amount. It sets up a process similar to the $10,000, but it would set up a $15,000 amount. Say the amount of non-participating pension that they could get a deduction for would be the lesser of the amount of the pension, or the pension reduced by Social Security and railroad retirement amounts. So if they do have Social Security, that would reduce the amount of their pension from the pension amount. The pension amount is $15,000 in 2021, increasing $5,000 a year until it would reach the maximum amount of Social Security benefits that a person could receive. And I put down a very incorrect amount in my summary on the bill chart of LD 1227. I put in parentheses that was $142,800. That actually is a different amount. That's the maximum amount of salary that a person pays into the Social Security system for. The actual amount, the maximum Social Security benefit that a person can receive depends upon your employment record and the age at which you retire, but it's generically about $35,000, according to the internet anyway. So what this bill would provide would be an extra amount for the people who are employed under these non-participating systems and not receiving Social Security. There may be some technical issues with the definition. What the term that the bills use is civil service retirement plan benefits. I'm going to kind of defer to Maine Revenue Services on that, though, because I'm not sure I can explain it, that I understand the bills well enough to be able to explain their relationship. But in looking in the bill at the definition, it says retirement plan benefits under Maine PERS, or a similar retirement plan of another state government or local government or the federal government as a result of service that is considered non-covered service under Social Security. That definition does not seem to me to make a distinction between state systems which have, which are the hybrid, which also participate in Social Security, in which case those people are also earning the Social Security benefits, and systems like Maine's, where employees do not earn Social Security benefits. I'm not sure if that's an issue of the possibility that people might be able to benefit under both the Social Security and the pension deduction or not, but I'll defer to Maine Revenue Services about whether I'm crazy about that.
Representative Dodge is with us. Representative Dodge, just wanted to ask if you had any additional information you wanted to provide to the committee, since we're taking up these three bills, one of them being yours.
Good morning. Thank you very much, Mr. Chair. Oh, nice to see all of you. And wow, if I sat on taxation, my head would be in more of a continual spin than it is serving on education. So God bless you and your work. I have no further information other than perhaps just a comment on the differentiation between the MEPERS and civil service definitions. When we were drafting this bill, often folks target a very narrow range in a bill, and in discussion, it seemed that there might be others who were suffering from this lack of parity with Social Security, and thus we incorporated the civil service part in the definition. Thank you.
Thank you. Representative Terry. I think you're on mute, Representative Terry.
There we go. Sorry about that. It said that I could hit my space bar, but it was lying. So I just want to be clear, though, that the other than teachers or folks that work in education for the state, the rest of the civil servants are essentially state employees, correct, Representative Dodge?
To the best of my knowledge, that is correct, but I will be totally transparent. I'm a retired teacher, and so I have a bit more familiarity with the MEPERS, but I would urge you to speak to the experts on this. I wouldn't want to give you incorrect information.
Okay.
Thank you.
Go ahead, Julie.
The main PERS system and the bill simply just makes a reference to the statutory Title V, Part 20, which is the entire main PERS system. It also includes something called participating local districts, which are mostly, but not 100%, municipalities which can participate in the system so that they don't have to administer their own pension programs. They can participate in the system. They can adopt some differences. They have some options that are a little bit different from the system for state employees. Teachers are covered the same way as state employees are. But for the local districts, they can choose to participate in Social Security, and some do. So some municipalities participate in as a participating local district, with MainePERS essentially administering their retirement program for the municipality. So the municipal program is going to be it's going to be different probably from the way MainePERS works in terms of calculation of benefits and how much you contribute and that kind of thing. But they are covered under Title V, Part 20, which is what this definition uses as the standard.
Julie, do you have a fiscal note or an estimate of what each of these three bills would cost?
It would be in the main revenue services testimony, which I'm looking for. For 1145, approximately $30 million per year. There is not an estimate for 1227 available, and 1413. 1413 was printed later than the other bills and was heard earlier this week. It was added to the work session for today because it is similar, the same as one of the other bills and similar to the others. So at the time the testimony was written, it was at the public hearing on the other bills rather than 1413s, but 1227 and 1413 I assume would be the same, with an estimate not available yet on those. Main revenue services may have something to add, I'm not sure.
Okay. Do you think they would cost more because they're trying to do a little bit more than 11:45 or? We could also ask main revenue services too. I think they're in the waiting room.
I don't know.
If we could bring main revenue services in from the waiting room. In the meantime, we have a question from Representative Collins.
Julie, I think when you mentioned what some municipalities can choose to do, I do believe that's I know that's accurate because I know some police officers in some communities told me that they have the same offset problem that teachers do. So I know that it does impact others as well.
Dr. Allen, looks like you're now with us here. Could you shed some light onto the fiscal note or some estimate on LDs 1413 and 1227, what those two bills might have for fiscal note?
So, good morning. So I apologize. I've been half in and half out trying to listen to this and at the same time react to some other incoming emails and so forth. I really do apologize. You'd have to explain which bills you're looking at to me, or maybe Heather or John can do a better job. We've looked at some of these bills in the past, and to the extent that the bills that you're dealing with at the moment are consistent or somewhat close to those previous bills, I'm sure we can dig up what we estimated back then, but we haven't had time to estimate any of the bills that are in front of you at the moment.
We're looking at 1145, 1227, and 1413. 1145, we believe the fiscal note's about 30 million a year. And just wondering if 1227 and 1413, which are both very similar bills, if not identical, would have a fiscal note that would be something higher than the 30 million a year, because they're looking to do a little bit more. And if we have any idea, some sense of what that might be for cost, but if you haven't had a chance to figure that out, I totally understand.
Yeah, no, we haven't. I mean, I think what I can say is, in general, we would prefer to use the current framework of the pension, or it's really a retirement deduction. We call it a pension deduction, but one of the changes that took place in 2013 was not only to increase it from 6,000 to 10,000, but to also expand the deduction to cover IRAs and other sorts of retirement income as well. So that framework seems to have worked for the most part, and I think the more we kind of slice and dice different types of retirement plans and so forth, the more complicated it becomes. Mm-hmm. And so if the committee can kind of stay within the current structure, we think that would be the easiest for taxpayers and for the administration of the deduction.
So when you say stay within the current structure, are you speaking more to the language in LD 1145 being something that would be easier to administer? I think that's the similar same bill that former Senator Shanna Bellows had sponsored that worked with the department on last session.
So that just increases the $10,000 deduction?
No, this is the one that that does essentially 100% income deduction for main PERS and Social Security, or for main PERS. Sorry, not and.
Well, that might be somewhat simpler. I think our concern there were equity issues.
Yeah.
Of providing 100% deduction for main PERS retirement income and not providing a similar deduction for private pension income or even Social Security, since a MEPRS pension could be higher, pension income could be higher than the maximum Social Security benefit.
Mm-hmm.
Mr. Chair.
Go ahead, Representative Terry.
Thank you. So I know we're kind of throwing you under the bus here, Dr. Allen.
That's okay. That's what I get paid for.
So it sounds to me like what you're saying is either 1227 or 1413 are as close to what we do now but just makes the adjustments so there's better parity?
Yes, I think anything that might increase the $10,000 to bring greater parity between all sorts of retirement income would be our preference. It also solves, again, I'm sorry, I was half listening. It was Representative Hanley's bill trying to deal with the previous non-residents who worked under a different state's retirement plan and had it
No.
taxed and then
No, we haven't
moved
gotten
into
there
Maine.
yet.
Oh,
We
okay.
haven't gotten to those yet.
Yeah, all right. But our view is if you increase the $10,000, it covers that issue too, to some extent.
Yeah, to some extent, right,
Yeah.
right. It just doesn't keep going. Okay.
Additional committee discussion.
It's a lot to sink in.
So Dr. Allen, it sounds like you of these three bills we're talking about, you prefer either 1413 or 1227?
I think we would recommend increasing the $10,000 to some greater level, whatever the committee feels like is affordable and, within the state's current finances. And we think that would help to bring more equity to the program for everybody.
So Senator, I can do a quick lookup of what the fiscal note was last time around, and perhaps that might help us.
Well, I don't think we heard the language of these bills last time around, correct? The 1413 and 1227?
I think Representative Dodge, correct me if I'm wrong, but you had based your testimony on, or based your language on Senator Bellows' bill from last session.
That is correct, with a couple of tweaks, as I understand it.
Right.
Okay.
So LD 162, correct?
I was confusing that with Representative Warren's bill. I thought her bill was after Shanabella's bill.
If
But
they're,
not all that stuff, but
let's see if we can find the fiscal note on that.
do you have something, Representative Dodge?
Thank you, Mr. Chair. I would just be interested in the details of the fiscal note as it intersects with the $5,000 increments that we thought were wise to include for a gradual enactment. Gradual.
So
Thank
that was not in Senator Bellows' bill, correct?
I'm sorry, I can't answer that at this time.
It doesn't appear, it does not appear that that is the case.
Thank you.
Okay, so for the committee, prior to that, just to get to parity, not including the increments, for this year, had we passed that bill, the fiscal note would have been $13 million, and for next year would be 18. So considerably less than the 30 million per year that LD 1145 has as a fiscal note.
And I mean, we can, whatever we decide to do, I mean, these bills would go to appropriations, and if there isn't enough money, they could make adjustments at that point. Fund whatever they think they can afford to fund, but I think we should move forward on at least one of these bills. I mean, the three bills are somewhat similar. It seems like 1413 or 27 are the way to go from the department's perspective. So I guess with that, I'd like to make a motion to pass as amended on LD 1413. We can still continue to talk about all these bills. Would like to put that motion out there. About to pass as amended on LD 1413. Would anybody like to second the motion?
We've got a.
Mr. Chair,
Yes, go ahead.
I don't know if other committee members would like to take a brief break. I'm just throwing that out there if it's of interest to others.
I think I would, yeah. Perhaps a quick caucus.
Yeah, we can do that. If there's a request for a quick caucus, maybe we'll take a 5-minute break and come.
Or come back at, it's 9:52 right now. Perhaps come back at 10 o'clock, get 8 minutes in. Everybody can stretch their legs as well.
Yeah, that sounds good. We'll go at ease for 8 minutes until 10 o'clock.
Sounds good.
Ben, you might want to shut your mic off.
Oops, sorry.
Avery, did you get a second on the motion?
There wasn't one.
Okay, I didn't think there was, but I wasn't sure. Thank you.
I had to go away for a few minutes. What's going on right now?
Caucus.
Oh,
Yeah.
okay. See ya.
For 1413, there was Senator Chipman made an OTPA motion, and we didn't get a second, and they went into caucus, but now they are starting to come back.
So welcome back, everybody. We might as well get back into our work sessions. I guess I'd just say right off the bat, I had made a motion. I don't believe there was a second to the motion. So we're still in work session on all three bills, LD 1145, 1227, and 1413. Committee discussion or questions of the committee. And Avery, I believe Senator Rafferty is in the waiting room. If you could bring him in as well. He was not able to, I don't believe he had the link earlier, so he wasn't able to be with us earlier, but he has the link now, so he should be able to be brought in to our meeting. So if someone can bring him over, that would be great. Do you see him, Avery?
Sorry, what was that?
Senator Rafferty, I believe.
Oh, okay.
Bring him over. Just to recap, he was not able to be here earlier. He didn't have the link for the meeting. He wanted to be here and is here now. And we're still in work session on LD 1227, 1145, and 1413. And there are no motions on the table at this point. So additional committee discussion. Representative Matlock.
Yes, thank you, Mr. Chair. Mr. Chair, I move we ought to pass LD 1227.
As amended.
There's a motion by Representative Matlock of ought to pass on LD 1227, seconded by Representative Terry. I assume that's as amended with the fiscal note.
Yes, it is. Thank you.
Great. So ought to pass as amended with the fiscal note. Further committee discussion. Go ahead, Representative Matlock.
Thank you, sir. Yes, both of these bills do what we, at least some of us on the tax committee, want to get done. Regrettably, they're identical bills. They were put in by people who have identical career paths. While I respect Senator Rafferty, I know that Representative Dodge has worked long and hard on this bill for the last year. And I believe that her working knowledge of the bill is shown here, and I would like to support her, but also Senator Rafferty, because I believe he also is committed to ensuring that teachers and others who participate in Maine PERS are not left out of the retirement system or are penalized for their involvement in Maine PERS.
Any additional committee discussion? Seeing none, all those in favor of the motion, please signify.
Okay, I have Senator Chipman and Representatives Terry, Collings, Matlack, Perry, and Sachs.
All those opposed?
For those opposed, I have Senator Pouliot, Representatives Hanley and Carmichael.
So that motion carries. So we're still in work session on.
Can I ask what the minority report is? Is it ought not to pass? Minority report?
Yes, it'll be an ought not to pass.
Thank you.
So we're still in work session on LD 1145 and LD 1413. Any further committee discussion? Would someone like to make a motion? Representative Terry.
I'd like to make a motion, as much as I like the idea of it, ought not to pass on 1145.
So this is Representative Warren's bill, LD 1145.
Correct.
Is there a second?
Representative Matlack.
Representative Matlack, is that you seconded? Okay. Okay, so we have a motion of ought
Yes,
to
I am.
pass, ought not to pass, I'm sorry, ought not to pass in LD 1145, made by Representative Terry, seconded by Representative Matlack. Any further committee discussion? Seeing none, all those in favor, please signify. So that appears to be unanimous, or no? Did you vote, Representative Collins? Representative Collins, are you voting?
You're on mute, Ben.
I had voted earlier.
We're on 1145. You did-
11:45.
Oh,
was
I
that-
thought yeah.
It's an ought not to pass motion.
Yeah, I thought I already voted.
Okay. I didn't-
Oh, okay. Sorry, I missed it.
So is that unanimous, Avery? Is that your understanding?
Yep, for who we have. Yeah. We have 1, 2, 3 members, 4 members absent.
Okay, great. So we're still in work session on LD 1413. Any further committee discussion? And I see Senator Rafferty's with us. Do you have anything you'd like to add, Senator Rafferty?
Oh, I understand the situation that you folks are in, and I think that the most important thing for me was the outcome of the bill. And I think if, you know, that's what I'm committed to most. I know that there's, again, 2 identical bills. Be very honest with you, as a rookie, I wouldn't know how those are handled. It's probably impossible to put 2 names on one bill, but I have a great deal of respect for Jan's goals, and I think that she does of mine. It's because it's essentially we're asking for the same thing. The outcome is, in my opinion, is the retired teachers in the state of Maine are going to be the winners, and that's most critical from my viewpoint. So thank you.
Thank you for that, Senator Rafferty. Now, we've had some discussion offline about this, and sort of, you know, we don't do mandatory co-sponsors anymore, at least this year, because we're meeting remotely. And so in the past, they would match the 2 bills up and have whoever put in their bill first, you know, would be the sponsor, and you become a mandatory co-sponsor if you put your bill in second, or vice versa. But that's not happening this year. And so, I mean, I support both bills. We did some discussion offline of possibly carrying one bill over should one not get funded this year, and the state's financial picture be even better than it is now next spring. But I don't think there's support for that. So given that, I mean, I plan to vote for both bills. I think they're both good bills, and I think we could send them to appropriations, and they could decide which one to fund if either, if they can fund either bill, which is still a big question mark. But appreciate your work bringing the bill to the committee, and I understand you would have been here earlier should you had the link, but you didn't have the link to join us, so that's not your fault, and appreciate you being with us now. So
Thank you.
given that, is there a go ahead, Representative Sachs?
Thank you, Mr. Chair. So it's with regret and respect to Senator Rafferty, I move ought not to pass.
So we have a motion of ought not to pass. Is there a second? Seconded by Representative Matlack. Motion made by Representative Sachs. Further committee discussion. So just so folks know, I'm going to be voting against this motion, and we'll be having a report of ought to pass as amended on this bill, because I do support this bill equally to the previous bill, and don't want to have to choose between the 2. So I'm going to vote for this bill. Seeing no further discussion, all those in favor of the motion, please signify.
Okay, for those voting in favor of the ought not to pass motion, I have Representatives Terry, Collings, Matlack, Perry, Sachs, Hanley, and Carmichael.
All those opposed?
And then I have Senator Chipman on the minority report of ought to pass as amended.
Yep, that'll be ought to pass as amended with the fiscal note. And there's still some other members that haven't voted, so let's see how things go in the end. But that closes the work session on LD 1413. So now why don't we go into work session on LD 1243 as well as LD 1067, since they're fairly similar in nature. We'll hand things over to Julie to walk us through those bills.
These deal with a different issue that's presented by state pensions with regard to the treatment of people who lived in there and worked in another state in a state government pension system that was not participating in the Social Security system, but then retires to Maine and starts collecting their pension. So remember back at the beginning, contributions to the pension system are taxed at one point or another, either when the contribution is made to the system or when the pension is collected. Under the way a Maine employee, worker, and retiree is treated, using me for an example, when I make my contributions to the retirement system while I'm working, under federal law, those contributions are exempted under federal law from the income tax. It's a system where they call it the state picking up my contribution. It's a legal fantasy that's created by this. It's still my income, I'm earning it. It's my contribution under state law. It says I'm required to contribute 7.65% of my income to the state retirement system. But federal law says the state can take responsibility for that. So the state sends that money to the retirement system. The benefit to me of that is that I don't have to pay income tax on it while I'm working. However, the federal government's going to get its money at one point. So when I retire and receive my pension, the amount of pension that I have to pay income tax on will include those picked up contributions. If I had made the contributions myself and they hadn't been picked up, then I would pay while I was working. I would not pay when I received the pension income tax. However, when the federal government came up with this plan, they permitted states to mirror federal treatment or not. And the state of Maine decided to not mirror the federal pickup treatment. So when I file my income taxes this year, my federal adjusted gross income will not include those contributions to the retirement system that were picked up by the state of Maine. I will not have to include those in my federal income. I will not pay federal income taxes on them. However, when I file my state tax return, state law requires me to add those contributions back to my income. So I have to add them back and I pay state income taxes on them while I'm working. However, when I retire, I will pay federal income taxes on those amounts, but I will not have to pay state income taxes on those amounts. Okay, so I'm a Maine person. I live and work here and I will be retiring here. But the problem that these bills address is, let's say, a person who worked for state government in Massachusetts, who also had the pickup system, where that employee did not pay income tax, where that employee did pay income tax because Massachusetts didn't mirror the federal treatment of the pickup contributions. So they're working along just like I am. They're making their contributions to the Massachusetts pension system, just like I'm making mine to Maine. But in Massachusetts, they're paying tax on them just like I am here in Maine. They retire to Maine. Maine law provides that for me, because my contributions were picked up by the Maine State Retirement System, I get a subtraction modification when I'm retired from my income of those amounts. However, it's only a subtraction modification for contributions made to the Maine state system. The retiree from Massachusetts under current law does not have a subtraction deduction for the payments that they made to Massachusetts back when they were working. So they end up paying in Maine as well as having paid when they were working in Massachusetts. So these two bills are intended to address that problem. LD 1184 provides that if the contribution was taxed to the worker at the time that they were working in another state, Massachusetts taxed it, and that state has a reciprocal agreement with Maine to treat people from Maine who retire to Massachusetts the same, then they can also qualify for that subtraction deduction from their pension version. So they can retire to Maine and get the same benefit that I have, because if they made the payment when they were working in Massachusetts to Massachusetts, and if Massachusetts has a reciprocal agreement with Maine to treat Mainers who retire to Massachusetts the same way. That's LD 1884. LD 1243 says that if the employee contributed to the other state's plan, they can get the deduction in Maine. So the Massachusetts people moves to Maine, retires, they can get that deduction in Maine. It does not require that the other state have a reciprocal agreement with Maine, that if I move there, then I would not have to pay that Massachusetts. No, wait a minute. It also does not, well, it does not require that the Massachusetts retiree have paid the Massachusetts system. So it's simply if they come here, they get a deduction for the portion of the retirement benefits attributable to the taxpayer's contribution to an employee retirement plan. It says it does not have to pay. I'm gonna look at the bill again. I'm not sure what my notes mean. Okay, so it provides a deduction at the pension for the retiree from another state, amount equal to the amount of the taxpayer's contribution to an employee retirement plan or an individual retirement account while resident of another jurisdiction. So it's just if they made a contribution, it doesn't require that they have been taxed on the jurisdiction at the time. As I'm reading this. Somebody from Maine Revenue Services can correct me if I'm wrong. Thank you.
Committee discussion. Representative Terry.
Julie, do we have, and maybe this is a question for MRS, but do we have any way to collect income tax from the state of Massachusetts or any other state, you know, California, from wherever that people move here, for when people move here?
Well,
that's the word I'm looking for.
Incidence of the taxes was when they were working.
Right.
It would have been in the year that they worked, and they made the contribution in that year would have been when it was taxable in that state. We would not have any connection to that income to be able to tax it. However, we do have the ability to tax their pension once they are residents of the state of Maine, regardless of whether they have paid Massachusetts or not.
Right. And we do that because it's income, correct?
Yes.
And we just charge income tax. Okay.
Yes.
Yep. Okay. Sorry, I lost my chart for a minute. Okay, Senator,
Yes, go ahead, Representative Terry.
I'd like to make a motion since that we, I'd like to make a motion ought not to pass on LD 1243 as there's no way to have reciprocity with other states from when the time that person was working. Do I have the right bill here? I think so. Yeah.
I think that's the bill, but the reciprocity that is in 1884 is,
Okay. Apologies. The 1884 is the one that I was looking for. I apologize. I lost my chart for a minute there. So I'd like to make a motion ought not to pass on LD 1184.
We have a motion of ought not to pass. Is there a second?
A second.
Second.
I don't know if I was confused. 1884 is the one that says that Massachusetts residents, retirees here can get that treatment, can get the deduction here if Massachusetts will also give a Maine resident that reduction if the Maine resident retires to Massachusetts. So it has the equal treatment of people moving from one state to the other, regardless of which way they're going.
Point of order, Mr. Chair.
Go ahead, Representative Sachs.
I believe the bill number is 1184, not 1884.
Oh, thank you.
Yes,
very much.
it is.
Just want to make sure we're, I
You're
know
right.
lots of charts, as Representative Hanley said, there's lots of charts this morning. So, and so I just want to clarify, the motion is ought not to pass for 1184. Is that
Gotcha.
correct?
Correct.
Thank you.
Yeah.
Thank you.
Yeah.
Again, I apologize, my video's in and out, but my audio is good.
Do
Thank
not
you.
apologize. I'm looking at rows of numbers that I have to match up and it's not working great. Still make the motion. I think we're, if there's committee discussion.
Any further committee discussion? Seeing none, we have a motion on the table. All those in favor, please signify.
Okay, for those in favor of the ought not to pass motion, I have Senator Chipman, Representatives Terry, Collings, Matlack, Perry, and Sachs.
All those opposed?
For those opposed, I have Representatives Hanley and Carmichael.
So that motion carries. We'll close the work session on LD 1184.
Can I ask what the minority report is? Ought to pass the
Ought to pass.
fiscal note, amendment for fiscal note.
Also, who seconded that motion?
Representative Matlack.
Okay, okay.
So that closes the work session on LD 1184. So we're still in work session on LD 1243.
Mr. Chair?
Yes, go ahead, Representative Terry.
Again, I think not having a way to reciprocate the cost of what this is and not having any control over who moves in and out of the state, I'm gonna make a motion ought not to pass on LD 1243. I think I got that number right, Representative Sachs?
So is there a second? Seconded by Representative Sachs. Great. So we have a motion on the table of ought not to pass in LD 1243. It's been moved and seconded. Any further committee discussion? Representative Hanlon.
Thank you, Senator. I will be supporting the ought not to pass simply because it's not inclusive. It only deals with out-of-state pensions. And as my earlier bill would have included all pensions. So I will be supporting the ought not to pass for that reason. It's too narrow.
Okay. Any further committee discussion? Seeing none, we have a motion on the table, ought not to pass. All those in favor, please signify. So that appears to be unanimous.
Yes, got it.
Great. So that concludes all of our work sessions for this morning, I believe. That's all the bills we had on our schedule. So I guess we will adjourn for a few minutes and come back for public hearings at 11 o'clock. We have a couple hands up. Did you have something, Representative Matlock? No? Okay. Great.
Quick question for Avery. Do you have an attendee list for us?
Working on it right now. 2 minutes.
Okay, thank you very much. Don't kill yourself. All right, see y'all in a few.
See everybody at 11 o'clock.
Mr. Chair,
Go ahead.
I'll be here to get things going, but I'm gonna have to leave shortly after, and I'll try to get back to the rest of it.
Okay. Yeah, if you can be here to help us get started, that would be great. And I understand some people have to be in other places, so it's fine. Excellent. We'll see you then.
We use the same name.
Yep, just stay on this meeting.
Oh, okay. Thank you.
Yep.
All right, an up-to-date registration list. That's awesome, Avery. Not something we get all the time.
Very up to date.
Yeah, we'll keep an eye on the, I've been trying to keep an eye on the website too, just because it does shift pretty quickly.
Yeah, no deadlines this morning. I guess it helps when we have a busy work session too.
Yeah.
Do we know if we're going in order?
We're going to hear actually.
Them
Representative
out of order.
Grayson's.
You want to take LD 11-1500 first and then the others in the order that you sent on the registrant list. I can go over all that when we get started.
Okay,
Representative Lookner said he did not get a link.
just sent it.
You did, okay, great. As soon as Representative Lookner joins us, I guess we can start because we have quorum. So we'll wait for him.
Hey, Avery, would you mind shifting Dr. Allen over to the attendee list?
Oh, yeah. Oh, sorry. I thought I
Mr.
made
Chairman.
you a co-host earlier.
That's okay. I do not mind not having that wield of power.
A question, Madam Chair.
What's the question, Representative Hanley?
Are we taking these bills in order today, these public hearings?
We're going to take up LD 1500 first, followed by LD 1136, 1289, 1369, and 1443.
Thank you.
Although we have some that are very similar. Yeah, what do you think, Representative Terry? Should we take up LD 1500, 1136, and 1443 and 1369 together? One has to do with property taxes and the rest are income tax. Should we do all the income tax ones together?
Yeah, that sounds like a great idea. I think Avery just sent a message about Representative Andrews having a hard time getting in. Yeah, okay. So we'll maybe wait till all of the sponsors are here, but I think,
So in that case, we need not only Representative Lookner, but Representative Harnett and Andrews.
Lookner, I just spoke with him. He's coming. Oh, yeah, he's here. I'll promote him.
Yeah, if you can bring him in, is Representative Harnett with us?
it doesn't appear to be, but I can send him a text.
And we need Representative Andrews, so that way they can all introduce at the same time.
Okay, well, so let's wait for Representative Andrews to jump in because he is right? You guys are speaking, Avery.
Sorry, what was that?
Representative Andrews, are you helping him in?
I don't think it's a Zoom thing. I think it's, I mean, his aide just told me tech issues, so I'm not totally sure what's going on.
Okay. Let me see if we can get Representative Harnett and have Representative Andrews come in late or after the other two. Representative Harnett says he can be here in 3 minutes. So perhaps we ask Representative Lookner to read slowly and we can hopefully hear all 3 bills at the same time.
Well, there's 4 bills and we could hear Representative Collins after Representative Lookner if we need.
Great.
And
Okay,
then,
terrific.
So while we try to track down Representative Andrews and we're waiting a few minutes for Representative Harnett, let's get started. Welcome everyone to the Committee on Taxation. We've already done our introductions earlier. We're now holding public hearings on 5 bills. We will take up LD 1500, LD 1136, LD 1443 and 1369. We'll open the public hearing on all 4 of those bills at once. We typically do this for folks who have not attended our meetings before. When we have issues that are similar in topic, we'll have the sponsors all introduce their bills at once, and then we'll have the public speak in favor of one or all of the bills at one time, in opposition to some or all of the bills at one time, and then neither for nor against one or all 4 of the bills at the same time. We'll be asking those who speak from the public to keep your testimony to 3 minutes. And if we reach 3 minutes and you're still speaking, we may ask for a final thought. And by that, we mean a sentence or 2 to conclude your testimony. So with that, we'll open up the public hearing on LD 1500 and welcome Representative Lookner to introduce this bill.
Thank you, Mr. Chairman. I will do my best to speak slowly. Anyway, just kidding. All right.
Appreciate the thought.
We'll get serious here. My testimony is short, so. Senator Chipman, Representative Terry, and honorable colleagues on the Committee on Taxation. My name is Grayson Lookner, and I represent the neighborhoods of Libbytown, Nason's Corner, Rosemont, and Stroudwater in Portland. And I'm here to introduce LD 1500, an act to bring equity to Maine's tax law by adjusting certain individual income tax rates. The impact of the economic fallout of the last year has not been shared evenly by all Mainers. While low and middle income families struggle to keep a roof over their heads and rely on inconsistent federal benefits and protections to survive, our wealthiest residents have never had it so good. Economic inequality has been growing for decades, but the pandemic has ripped it wide open and exposed a rigged economic system that works incredibly well for millionaires and billionaires while leaving everyone else out of that prosperity. In order to ensure the economic recovery and rally for the highest echelons of income earners benefits all Maine residents in the long run, it is incumbent on this legislature to act. This bill would adjust Maine's income tax to serve 2 purposes. First, it would ensure that the wealthiest households, those with the greater capacity to invest in shared prosperity, would pay more than low and middle income households. Secondly, it would make it possible to make sustained investments in Maine communities. Investing resources into communities through investments in education, local services, public health, affordable housing, and other essentials is how we lift our communities up so that all Mainers can succeed, not just those with the biggest bank accounts. My bill would raise an estimated $300 million annually to meet those needs for our communities. For too long, Maine has moved in the wrong direction on income taxes. Maine schools and communities have been shorted over $3 billion over the last 10 years, while the wealthiest households have benefited from massive federal and state tax cuts. This bill would ask a little more of the top 12% of Maine households so that we can get to work meeting the unmet needs across our state. Excuse me, I think that's supposed to say the top 2% of Maine households. Thank you for the chance to present my bill, and I'm happy to answer any questions. Again, I want to reiterate the top 2% of Maine households. So.
Great, thank you, Representative Looker. Are there any questions from members of the committee? Doesn't look like we have any questions. Thank you for being here to introduce this bill. It's good to see you.
Thank you, folks.
So we'll now hear from, it's like Representative Andrews is with us now. Maybe we can hear from him to introduce to us LD 1369.
Good morning, everybody. Thank you for having me.
So we're ready to
Senator Chipman, Representative Terry, and distinguished members of the Committee on Taxation. My name is John Andrews, and I represent the towns of Buckfield, Hebron, and Paris that make up District 73 in the foothills of Western Maine. I'm here to testify in favor of my bill, LD 1369, an act to provide for economic stimulus for recovery by enacting a flat 5% income tax. Times are tough for Maine's businesses and workers. Many are struggling to make ends meet. Maine tax brackets go from 5.8 to 6.75 to the highest at 7.15%. Implementing a flat 5% income tax would lower the tax burden for all Mainers. People should be allowed to keep as much of the fruits of their own labor as possible. Our neighbor New Hampshire has a 0.0% income tax. LD 1369 would make Maine more competitive and our economy stronger on several levels. The first is the obvious competition with New Hampshire for residents, skilled workers, businesses, and high salary positions with advanced degrees like physicians. Lowering Maine's income tax to a flat 5% would help our state attract all of the above as we rebuild from COVID-19 and set our sights on the future. More importantly, it would help us retain our existing businesses, workforce, and professional medical infrastructure. We do not want our people in job-creating businesses fleeing Maine for states with a lower tax rate or no income tax rate at all. Maine is quickly moving up the charts to be the highest tax state in the nation, and this is not a pathway to economic success. How is our escalating and burdensome income tax rate going to attract new entrepreneurs, innovators, or the next generation of talented doctors who are looking to start their professional lives, put down roots, and hopefully start a family in Maine? Sadly, the current income tax paradigm will not attract any of these vital aspects of our economy. And this is why LD 1369 is a very necessary bill for Maine's economic success in the future. Maine household incomes are modest, and because of that, our state income taxes must not be exorbitant. Allowing all Mainers to have more money in their pockets from a flat 5% tax would empower them to spend more at local businesses. That would result in a healthier local economy across the state. Also, our tax structure must not be punitive to those who strive to be successful business owners. Those entrepreneurial types must be empowered and supported by their government. We must allow business owners and entrepreneurs to succeed, and a flat 5% income tax would help accomplish that. In these tough times, businesses would not have to beg for help from the government if they were allowed to keep more of the fruits of their labor. More importantly, this would prevent the government from picking winners and losers. A large portion of the extra income for businesses resulting from a 5% flat tax would surely be reinvested into their operations as they chase success and seek to reclaim what they had before the pandemic. The time is now to enact a flat 5% income tax because of all the federal money pouring into Maine as a result of relief programs enacted by Congress. Those funds should be used to fill any gap in revenue resulting from the newly enacted flat 5% income tax to provide relief to our businesses and all working Mainers. We as a legislature can do this if we want to, and we should, because our people need the relief in these tough times, and it would help retain our existing business infrastructure while helping to attract new businesses, workers, and the next generation of physicians to our state. I would wholeheartedly ask you to vote ought to pass on LD 1369 to set Maine up for success as we exit the COVID-19 pandemic. Thank you for your time and your commitment to public service.
Great. Thank you, Representative Andrews. We have a question from Representative Sachs.
Thank you so much. Good morning, Representative Andrews.
Morning.
So I just want to make sure I did read your testimony. I want to make sure I'm clear about what you're proposing. In your testimony, what you just said was this way businesses, and I'm going to focus on the business aspect because that's where much of your testimony is centralized, that they wouldn't need to come to the government to look for handouts. So are you proposing to pay for this by eliminating other tax incentives? We've had quite a few before us, such as the research and development, the historic properties, the Maine seed tax credit. Is that how would you pay for it? Would you, because of your argument, would you say that we should eliminate those other programs?
I think that's a conversation for another bill. I mean, this one is pretty straightforward. The flat 5% would allow people who own businesses, both small and large, to keep more of their revenues. And if you know small business people, they're always trying to reinvest into their operations and infrastructure. And that's what this bill is trying to accomplish.
Okay, that wasn't quite, so you're saying we should reevaluate, if we were to pass this during maybe the work session, we should talk about the Betty Better program, which is a direct reinvestment of small businesses, the Maine seed tax credit, the research and development.
Yeah, I think personal property tax could be in that conversation as well. I mean, that's what work sessions are for, absolutely.
Okay, thank you, sir.
Any additional questions from members of the committee? Seeing none, thank you for being with us. Oh, we have a question from Representative Perry.
Thank you, Mr. Chairman. One of the things that stood out to me in your testimony is that Maine is quickly rising in tax burden, becoming one of the most highest tax states in the nation. It's been my impression, I haven't seen any statistics lately, that we've been dropping the last several years. So I'm wondering what the turnaround, I'd be curious the details of the turnaround. Are other states lowering their rates around us? Are our income stagnant? So as a percentage of income we're raising, I'd just be curious for the work session, the statistics on how we're rising to the top of the highest tax state rates.
I think there's a couple of testimonies that I read in support of this bill that have numbers on that. I believe we're currently 12th, and some of the proposed legislation would definitely move us up the charts if it were to be enacted in the 130th.
Any additional questions from members of the committee? Go ahead, Representative Hanley.
Yes, thank you, Mr. Chairman. Thank you, Representative Andrews. I think you know my position on income taxes. I'd have them at 0. How come you only went to 5? Are you willing to negotiate up or down from the position you have when we go to work session?
I mean, personally, I would definitely go with 0. I think, baby steps first. 5% is a gradual step in the right direction. We could potentially build off of that in the future. But we need to be competitive with New Hampshire. That's the bottom line.
Okay, thank you.
Representative Terry.
Thank you, Mr. Chair. Representative Andrews, would you consider moving the brackets then for folks that are low income to a higher salary, I guess. So they would, 5% of someone that makes minimum wage is quite substantial, whereas 5% to somebody who makes, say, $75,000 is less of a burden for them. So would you consider changing the tax brackets?
I would be open to a conversation with more data from analysts who probably know the numbers better than I do, but I'd be open to discussing.
And a second question, if that's okay, Mr. Chair?
Yeah, go ahead.
Have you crunched the numbers a bit? Have you looked to that to see what the implications of that are of a flat 5% tax rate?
Again, there's more detailed analysis from, I believe, Maine Policy Center and Americans for Tax Reform in testimony. They are much more well-versed in tax policy than I am, so I would encourage you to read their testimony.
Sure, great, thank you.
Additional questions from members of the committee?
All right, buddy, you guys sit down.
Seeing none, thank you for being with us, Representative Andrews.
Thank you very much.
See Representative Harnett with us. We're here to now open up the public hearing on LD 1136, and to present that bill is Representative Harnett.
Thank you, Senator Chipman. Senator Chipman, Representative Terry, and esteemed members of the Taxation Committee. My name is Tom Harnett, and I represent House District 83, which is the town of Farmingdale and the city of Gardner. I'm here today to introduce LD 1136, an act to promote fairness in income tax rates by making them more progressive. Currently, there are 3 brackets for income taxes in Maine: 5.8%, 6.75%, and 7.15%. The taxable income thresholds for each bracket vary depending on if you are a single individual, or a head of a household, or are filing a joint return, or are a surviving spouse. The proposal before you today adds a 4th bracket at 10.15% and would apply to tax years beginning on or after January 1st, 2021. To give you a clear visual, I've included a comparison of the current law and the proposal before you today as it relates to single individuals and married persons filing separate returns. I will not read them now, but I ask you to consider the chart that contains those comparisons. I want to stress that this 10.15% tax is only on the taxable income that exceeds each new threshold. For example, a single individual whose taxable income is $110,000 would owe $6,736 plus the 10.15% applied to the excess over $100,000, which in this example is $10,000, and that comes to $1,015 for a total of $7,751. Using my same example under current law, that individual would owe $3,175 plus 7.15% to the excess over $50,000, which in this example is $60,000 and comes to $4,290 for a total of $7,465. This is a difference of $286. Just to bring that into sharper focus, in 2019, the median household income for Maine was $57,918. Under this proposal, somebody with a taxable income almost double the state's median household income would be asked to contribute an additional $300. As I said before, when appearing before this committee, I realize you are awash in numbers, but focusing only on numbers sometimes makes us lose sight of the real impact the decisions we make have on the lives of Maine people, particularly our poorest residents and middle-class persons and families. This bill asks the committee to answer the questions: why does our tax code treat millionaires the same way it treats middle-class families? Is that fair? Currently, Maine's top income tax rates start at just $51,700 for an individual, or $103,400 for married joint filers. Therefore, a person earning over $1 million pays the exact same tax rate as one making $950,000 less. In my mind, that is not fair and certainly does not create a progressive income tax system that until recently was the bedrock of American tax policy. Please keep that in mind during your deliberations. There are others here today who will speak to the impact this legislation would have, including what % of Maine's tax filers would fall under this new 4th bracket and an estimation of the new revenue that would raise annually. You will also hear why the income tax is the fairest way to raise the revenue our state needs, and why the influx of new revenue we are currently experiencing does not negate the need for tax fairness. I thank the committee for your time and consideration of this matter, and I would do my best to answer any questions you might have. I would point out that I finished this testimony probably early this morning. And I think that I may have some numerical errors in one of my paragraphs. I will correct those as quickly as possible, and I apologize for that. It does not change the thrust of my testimony about what this proposal would do, but that is my fault for missing those errors. I apologize.
Thank
You're on
you on that. Are there questions from members of the committee? Seeing no questions, appreciate you being with us this morning and presenting the bill. We'll now open up the public hearing on LD 1443. This is being presented to us by Representative Collins.
It is morning still, yes. Good morning, Senator Chipman, Representative Terry, distinguished other members of the Taxation Committee. I'm Representative Benjamin Collins, House District 42, part of the City of Portland. So as you all can plainly see, there are many other bills dealing with the income tax brackets. I didn't realize the extent of that when I put this in. I hope we can focus on something that makes the most sense and kind of rally around one proposal that would be fair. The spirit of what I'm doing is trying to create some new tax brackets that would increase as your income level goes up, and specifically it would start over $100,000. There'd be 5 new brackets. The tax would be from over 100,000 to 250,000. It would go to 9.15%. Over 250,000 to $500,000, an income would be at 10.15%. Over $500,000 to $1 million would be at 11.15. Over 1 million up to 10 million would be at 12.15%. And over $10 million would go up to 13.15%. I'll just say very quickly that, since Eisenhower up till today on the federal level, there's been a huge decrease in the top income brackets as far as taxes go. So continually over the decades, taxes have been going down for higher earners. And more specifically, when we talk about, and then of course in the 1980s, when I was very much younger, there was another set of tax deductions for the highest income earners, which caused all sorts of financial issues at the federal level. It ended up affecting, having to take money out of Social Security and having to go and make new taxes over again to make up for the lost revenue. And just recently, in the Trump administration, there was a huge tax relief that was cost our federal government, a couple $1 trillion in funding at least. In Maine, we didn't about 100 years ago, with the creation of the income tax and states being able to do it. Maine a couple times tried, didn't go to it. They didn't go to it until Ken Curtis was governor in the 60s, a little bit before my time. But, years ago, I did talk to him and I did learn quite a lot about the work he did. Now, people in Maine did support this. It was a bipartisan effort led by Republicans that passed this in the House and the Senate. The Democratic governor, Ken Curtis, signed this law. A group tried a citizen initiative to reverse having an income tax in Maine. By 75 to 25% vote, the people in Maine upheld having a state income tax because they saw the benefit it did to help fund our state and all the good things it does for our society. More recently, we did drop down, I think, from 8.5% to, I think, 7.15 on the income tax. And ever since that happened, we have been short, for our education system and whatnot. Not related to that, though, we still aren't funding our schools 55%, which we should be. We're not giving back the 5% in revenue sharing, which we should be. We have a homeless crisis. We can't keep in many school districts. We're having a hard time keeping teachers and support staff because our pay is so low. We're in the bottom third in this country for teacher salary. I could go on and on and on. The highways, we have to go out to bonding to cover the most basic maintenance for our roads and infrastructure. And even after we just scrape by doing the bare minimum maintenance, we still really should be paying for hundreds of millions of dollars more in repairs, which we just can't. So the federal government now, they are sending us obviously lots of money for relief because of the pandemic, which is great. That is temporary. That's not going to go on endlessly. So we can't put all of our eggs in one basket and expect that we're going to be able to keep doing what we have to do in the state just by, letting it rain federal money here. So we have a responsibility and obligation to do our best to maintain and have a safe and healthy state and look out for the good and welfare of our young children up to our elders. So with that in mind, I propose this bill so we can collect more revenue based on those who have the most ability to pay. Again, as I said, for decades, high income earners have seen their taxes lowered. The trickle down economics hasn't worked. It's been proven. All it leads to austerity. And I will remind you, I think this is a fact, but I guess you could say it's my opinion. I don't think there's anything as a tax break. I think it's a tax shift. So when we give big deductions for the people that make the most on the federal or the state level, it gets passed on to others. And so what happens is when there's less money coming in from the federal level, the state gets that hit. And so when the state has less money or doesn't make up for what we lost from the federal level, we shift that burden to the towns. And then we have these highly regressive property taxes. And then towns are stuck to either make terrible cuts or raise taxes in a very regressive manner on the local taxpayers. So when we talk about how this shift occurs, it's not done in an equitable way. So I believe that we should look at a way to fairly, some extent, this is just an idea what I put forth, but the people of Maine do support a surcharge on higher income earners. We passed in 2016 from all over the state, a majority and a citizens initiative to a 3% surcharge on higher incomes to fund education. In polling federally and in the state, people support progressive taxation on higher incomes. And we all don't like to pay taxes, especially if we don't have it. I mean, people don't like to pay taxes if they're pinched and they don't have much money. I would say that people that have a lot of money, there's some that don't like to pay taxes, but I know several people that are millionaires, multimillionaires, or billionaires that want to pay more in taxes and feel it's the right thing to do. So that's what the bill's about. I'd be happy to answer any questions, and I'd be happy to work with this committee moving forward. We do realize that there's going to be federal tax reform. I'm not proposing that we conform in a manner to them because obviously I think they might go up to 25, 28% top rate on incomes. We're obviously not going to jack up our rates in Maine from 7.15 to that. That would be ridiculous. But maybe we could look at where their starting point is. If they start at 200,000 individual or 400,000 as a couple as the starting point to raise the tax a little bit, maybe we could look at looking at that income level and adding on a as you go up a small percent, half a point, 1 point, whatever it is, to get a little bit of revenue. And I'll conclude by saying that my proposal really, it's the top 1 to 4% that really would be paying for pretty much all of this in this tax. So I did my best not to burden low-income earners, middle-income earners, working families, and I do realize that in places like Portland, a single person or a family that's making even up to 100-something thousand, still not a lot of money when you consider the cost of housing and other factors. So I'll stop talking, but we'll answer any questions if needed, and happy to work with this committee on a proposal that makes sense in light of everything going on in the world. Thank you.
Representative Collings for introducing that bill. Questions from members of the committee for Representative Collings? Seeing none, thank you for presenting.
Representative Hanley has a
Oh,
question.
I'm sorry, do you have a question, Representative Hanley?
Yes, thank you, Senator Chipman. Representative Collins, thank you for your testimony. Could you, for the work session, give us the numbers on how much the top 50% of wage earners in Maine pay in taxes in the total revenue? And also, because by contrast, what the people below the 50% average income, what they pay in total revenue. Could we get that information for the work session?
Yes, sir. I will get all the research I can broken up by categories with all that, and so you can have a better look at the whole scale.
Thank you.
Yes.
Question from Representative Ferry.
Thank you, Mr. Chairman. Yeah, for work session, I have not come across this year, if it's out or not. Have we received anything that breaks down the tax incidents here in Maine by decile, who's paying what percent of income, right up from the bottom 10% to the top? As long as we're on the subject, that might be nice for work session on these bills.
Excellent. Any additional questions from members of the committee? Great. Well, thank you, Representative Collins. You've got a couple of homework assignments for us for the work session. I guess that's concludes your testimony. So thank you. So now we'll open up testimony from those who'd like to speak in support of any or all four of these bills on income tax that we've just had the sponsors introduce. And I guess we'll start with Adam Zuckerman, if he's in the waiting room, followed by Ann Danforth. Is Adam Zuckerman here?
I promoted both of them.
So first we'll hear from Adam Zuckerman, and then we'll hear from Ann Danforth after. Mr. Zuckerman, welcome.
Great, thank you for having me today. Senator Chipman, Representative Terry, and honorable members of the Joint Standing Committee on Taxation, my name is Adam Zuckerman, and I'm the lobbyist for Maine People's Alliance. Our 32,000 members stretch from Kittery to Fort Kent, and we are committed to creating a state of Maine where everyone has what they need, everyone contributes what they can, and no one is left behind. That's why I'm proud today to testify in favor of LD 1136, LD 1500, and against LD 1369. My grandfather came to the United States as a child, fleeing religious persecution and hunger in Russia. He came with absolutely nothing, but through hard work, he was able to achieve the American dream. However, it wasn't just his hard work that allowed him to climb that ladder. Over the years as a nation, we built rungs on that ladder. We invested in public education, Medicaid, roads, bridges, the GI Bill, SNAP, the Earned Income Tax Credit, and a relatively progressive tax code that allowed a poor Jewish immigrant like my grandpa to go from sharing a straw bed with his two cousins to earning a college degree, a master's degree in social work, becoming the executive director of the Jewish Communal Service Association of North America, and running a girls' summer camp on Echo Lake in Fayette for 25 years. However, in the years since, lawmakers in Washington and here in Augusta have passed tax cut after tax cut, benefiting the rich while disinvesting in the supports that helped a poor immigrant kid like my grandpa to achieve the American dream. Those already on top have greased up the ladder and broken most of the rungs, making it nearly impossible for those at the bottom or even in the middle to climb further. One thing that makes that climb even harder is that Maine's income tax treats millionaires the same way it treats middle-class families. Our top tax rate kicks in at just $51,700 for an individual, or $103,400 for married joint filers. That means that under our current tax code, the middle-class family pays the same top tax rate as a CEO with income of $300,000 or $1 million or more. That's just not right. In fact, it's worse than not right. It's directly opposed to our mission of creating a state of Maine where everyone has what they need, contributes what they can, and where no one is left behind. We pay taxes to strengthen our communities, but our current tax code helps the rich get richer. The wealthiest households have held their ground or even see their wealth grow during the pandemic. According to the latest data from the Federal Reserve, the richest 1% of households saw their net worth rise by $4 trillion in 2020, capturing about 35% of the extra wealth generated nationwide. The poorest half of the population, by contrast, got about 4% of overall gains. And they're trying to stack the deck even further. Today, you heard proponents of LD 1369 argue that we need to lower taxes on the wealthy because if we don't, they'll move to New Hampshire. This contradicts decades of data, which shows that millionaire tax flight is just that, a myth. Billionaires actually have a lower migration rate than the rest of us. Raising taxes on the highest incomes will go a long way toward addressing economic inequality by securing the revenue we need to make investments that allow all people in communities to thrive and climb that ladder of the American dream, not just those already on top. Thank you.
Great. Thank you, Mr. Zuckerman. Is there any questions from members of the committee? Seeing none, thank you for being with us today. Good to see you. We'll now hear from Ann Danforth, followed by James Lyson. And I've got to step out for a moment, so I'm going to hand the gavel over to Representative Terry to continue things while I'm away, and I'll be back in about 10 minutes or so. So welcome, Ms. Danforth.
Thank you. Good morning, Senator Chipman, Representative Terry, and members of the Committee on Taxation. My name is Ann Danforth, and I'm a policy advocate at Mean Equal Justice. We are a civil legal services organization, and we work with and for people with low income, seeking solutions to poverty through policy, education, and legal representation. I'm testifying in support of LD 1136, LD 1443, and LD 1500. Thank you for the opportunity to be here to testify. I want to echo Representative Hartnett's testimony about the importance of thinking about the people these policies impact. COVID-19 has made it all too clear that our economy and governmental systems are failing many low-income Mainers, particularly those from Black, Indigenous, and communities of color. Even before the pandemic, Mainers were struggling to meet their most basic needs. For these people with low income, even full-time work often isn't enough to cover the basics like decent housing, nutritious food, reliable transportation, quality childcare, and educational opportunities that can improve earnings. These challenges facing Maine's most vulnerable populations are also exacerbated by Maine's housing crisis. Even before the pandemic, the rent burden was unaffordable for nearly 4 out of every 10 Maine households. COVID-19 has made these hardships even more acute. Now, nearly 1 in 3 Maine adults report having trouble covering usual household expenses. As we look to rebuild our economy, we have the opportunity to create a more equitable future for the children and families in our state. An important first step we can take is to adopt a tax code that increases taxes on the wealthiest, many of whom have become even wealthier during the COVID-19 pandemic, while reducing the tax burden paid by Mainers with the lowest income who have been financially harmed by the pandemic. Maine Equal Justice supports these bills because of the opportunity changes to our income tax code afford to make Maine's tax laws more equitable and reinvest money into our state. At Maine Equal Justice, we work closely with Mainers with low income who pay a disproportionate share of their income in taxes. Taxes that are not based upon income, such as sales and property taxes, are assessed regardless of ability to pay, meaning low-income families end up paying a larger share of their income in taxes than wealthy families. Increasing income taxes on the wealthiest Maine households to reduce the share of taxes paid by low-income Mainers would help create a more equitable tax system and would enable us to invest in programs and services that really matter to Mainers, and particularly Mainers with low income. Thank you for the opportunity to express our support for these bills. I will do my best to answer any questions you might have.
Thank you, Ms. Danforth. Anybody have any questions? Seeing none, thank you very much for your testimony. We appreciate it. Next up is James Lyson. Following Mr. Lyson will be Jan Collins. Welcome, Mr. Lyson.
Thank you. Senator Chipman, Representative Terry, and honorable members of the Joint Standing Committee on Taxation. My name is Jim Lyson. I'm a resident of Lewiston, formerly a 2-term city councilor, and I'm here today to testify in favor of LD 1136, LD 1443, and LD 1500, and an ought not to pass on 1369. All of these bills would increase taxes on the highest incomes in Maine and would go a long way on unrigging Maine's tax code, which currently asks more of middle-class families than it does of the very wealthy. And that ain't right. The money raised by taxing the highest incomes can be used to address long unmet needs in our state. Raising the income tax is the fairest and most equitable way to raise the money Maine needs to properly invest in its people. The pandemic has revealed dramatically the income inequality we face in America and how healthcare for everyone is important for us all. Maine's income tax is fairer than other taxes because it asks those who have the most to contribute the most. That makes it fairer than taxes like the sales tax and property tax, because those taxes are assessed regardless of ability to pay. Low and middle income families end up paying a larger share of their incomes than wealthy families. And again, that ain't right. The income tax is also the largest single source of state revenue, which means that even small increases to the income tax on high incomes can raise the necessary resources to invest in Maine's peoples. The LePage era tax cuts mean the state has $400 million less in revenue every year. At the same time, because revenue cuts have to come from somewhere, the state has also reduced funding for education and local services. That made property taxes go up for everyone, another instance of working families or retirees picking up the slack when the system is manipulated to benefit those at the top. As a city councilor in Lewiston, I saw how this forced my city to either raise our tax rate or cut services, and how both of these negatively affected our residences. Rolling back LePage era tax cuts for the wealthy will make our tax code more fair and provide resources necessary to start regaining ground after years of state underfunding our schools and communities. I strongly encourage your committees ought to pass for these important revenue raising bills. I know that many will oppose them because of ideological views, but we need to do what is right for the people of Maine. And our budget should be based, and our tax revenues should be based on our needs. Thank you for the opportunity to speak today, and I'm prepared to answer any questions that you may have. Thank you so much.
Thank you, Mr. Lyson. Any questions? Seeing none, we really appreciate you being here today. Thank you.
Thank you. Have a good day.
Next up,
And good luck.
thank you. Next up is Jan Collins. Following Ms. Collins will be Jeff McCabe. Welcome, Ms. Collins.
Thank you so much. Can you hear me?
We can.
Great, thank you. My name is Jan Collins. I'm Assistant Director of the Maine Prisoner Advocacy Coalition, and I'm writing to support LD 1136, 1443, and 1500. I grew up in a prosperous small town in rural Maine. I'm underlining prosperous, not because it was unusual, because it was the norm. We did not have to travel for medical care because the local hospital had highly qualified surgeons and medical professionals of all types. Though my parents divorced and we lived in a single parent limited income household, we still went to college. Our homes were well kept and tidy. We all had jobs and we were proud homeowners. The town provided a free summer recreation program at the lake for all of its children, and that included transportation to and from. Our after-school programs and sports also provided free transportation so that everyone in all 9 towns in our district could participate. Property taxes were nothing to complain about. People who went to jail or prison did not spend their life there because there was rehabilitative programming. So what happened? To be sure, there are lots of contributing factors to the changes that Wilton has experienced, but one of them is surely that we forgot that when we work together, everyone succeeds and we all profit. I have included a graph from Tuesday's New York Times that shows the decline in taxes for the top 1% of taxpayers in the country. It's shocking. It is those periods when we ask the wealthiest Americans to pay their fair share of taxes that our economies thrived. We made infrastructure investments and investments in research and development. Our children went to college at public schools for free or very low cost. Our property taxes were lower and public recreation was something we all were able to enjoy. There were still plenty of rich people, and they still made investments in their companies and the workers who work there. In order to make the investments necessary for Maine communities to thrive, we need to return to a fair taxation system. The burden should not fall to the already struggling poor and middle class. It is time to take the lessons of history and to institute a progressive tax so that Maine's economy can once again thrive and rural communities are not forgotten. Thanks so much.
Thank you very much for your testimony. Does anyone have any questions for Ms. Collins? Representative Sachs.
More a comment, Madam Chair, what she said about the free transportation after school. As a proud graduate of Mount Blue High School, she's right.
Yes.
Hello, thanks.
Thank you.
Thank you very much. Any other questions or comments? Mostly questions. Seeing none, thank you very much. We appreciate you being here.
Thank you.
Next up is Jeff McCabe. Following Mr. McCabe will be Mallory Shaughnessy. Welcome, Mr. McCabe.
Good morning, Senator Chipman, Representative Terry, members of the Taxation Committee. The pressure when you're right on that noontime cusp of trying to get good morning or good afternoon, I just felt that pressure. It's kind of lifted.
Oh no, I think I just cut him off. Oh my gosh, I'm so sorry. Jeff, I apologize. I'm gonna bring.
It will be afternoon when he gets back on now.
Jeff, apologies. I'm so sorry.
It's okay. It's teleporting. We're still trying to figure out this science. At least I came fully intact. So I'm trying to be much more disciplined than I was yesterday before the state and local government, where I thought Representative Matlack might shut me off. But I'm going to try to stay on task and speak to what I have. So again, Senator Chipman, Representative Terry, members of the Taxation Committee, my name is Jeff McCabe. I serve as the Political and Legislative Director for Maine Service Employees Association. We're an organization, a labor union representing over 13,000 workers, retirees, and others here in the state of Maine, and really excited to be here in support of LD 1136, 1443, and 1500. This is a very important conversation that is happening today. The last year has shown us that essential workers in the public sector have been deemed heroes. Time and time again, we did things like put lawn signs out on our front lawn, put social media posts out, and we've done so much to recognize them as heroes in our communities, but we've done little long-term to address the sustainability of our revenue streams here in the state of Maine. We seem to be okay watching our public sector workers fight for crumbs as they struggle to have battles to raise their wages. We continue to have public hearing after public hearing on bills identifying the problems that we have in the state, but we don't fund the solutions. We seem to have accepted that our public sector retirees are slowly slipping into poverty, and that's okay. Currently, public sector positions statewide go unfilled, and in many positions, they just can't retain workers due to wages. Currently, many state workers can't afford their own health insurance premiums, and we're seeing members of the state employee workforce switching their family over to MaineCare just out of a necessity to be able to stay above water. Currently, the state of Maine has hundreds of workers earning under $15 an hour, and that wage gap for public sector workers continue to grow compared to private sector workers, and this is an issue statewide. We will say that short-term, one-time money from the federal government and elsewhere can only be used to plug holes. We need long-term revenue achieved through fair taxation to solve these long-term problems. The money raised by taxing high income earners will help us address this ongoing increasing amount of unmet needs for our schools, public sector workers like police, fire, public works and others. And with that, I'm happy to take any questions.
Thank you, Mr. McCabe. I appreciate that. You were even shorter than I was going to give you because I messed up your space.
I'm trying to be more disciplined these days, Representative. I can be long-winded, as many people know.
Representative Matlack is shaking her head, imagine.
Yep.
Any questions for Mr. McCabe? All right, seeing none, thank you very much. We appreciate it. Next up is Mallory Shaughnessy. Following Ms. Shaughnessy will be Sarah Austin. Welcome, Ms. Shaughnessy.
Thank you. And I think it is still good morning for a few more minutes.
Good morning, Representative Terry, Senator Chipman, and members of the Taxation Committee. My name is Mallory Shaughnessy. I'm the Executive Director of the Alliance for Addiction and Mental Health Services. I live in Westbrook. I'm here today representing Mainers for Tax Fairness. MFTF is a coalition of 22 organizations and growing, including the Alliance, that represent teachers, healthcare providers, policy experts, workers, small business owners, advocates for children and families with low incomes, and other groups fighting to improve tax fairness and building a stronger, more inclusive economy for all Mainers. Mainers for Tax Fairness is here today to testify in support of LD 1136, LD 1443, and LD 1500. Raising taxes on the highest incomes will go a long way towards addressing economic inequality by securing the revenue we need to make investments that allow all people in communities to thrive, not just those with the largest bank accounts. Maine's income tax asks those who have the most to contribute more back to their communities than families with low incomes. That makes it fairer than taxes like sales tax or property tax. Those taxes are assessed regardless of ability to pay, and low middle income families end up paying a larger share of their income than wealthy families. But unfortunately, today Maine's income tax treats millionaires the same as it treats middle class families. Our top income tax rate kicks in at just $51,700 for an individual or $103,400 for married joint filers. That means that under the current tax code, a middle-class family pays the same top rate as a CEO with an income of $300,000 to $1 million, or even more. The income tax is also the single largest source of state revenue, which means that even small increases to the income tax on high incomes can raise a lot of money to invest in Maine people and places. A strong progressive income tax is the best way to begin tackling inequality and raise the revenue we need to make investments in Maine's people and communities. Additional revenue is sorely needed. At this time, we've got growing income and wealth inequality. Mainers in our communities have big needs that existed even before the COVID-19 pandemic cast the shortcomings in our economic system in stark relief. I've got a few bullet points regarding some of those. I would want to just highlight, being here from the Alliance as well as the coalition, that Maine's social safety net for mental health, substance use disorder, developmental disabilities, and aging in place services have declined in volume while the need has risen. And the pandemic is placing additional burdens and pressures on this safety net, and we need to invest now. These unmet needs, among others, hold back our entire state. Hardship falls disproportionately, however, on women and Mainers of color. At the same time, those at the top have benefited and grown their wealth through big income tax cuts in recent years. Under the LePage income tax cuts, with most of the benefits accruing to those at the top. At the same time, the state increased the sales tax, which disproportionately paid by poor and middle income families. The loss of roughly $400 million in revenue annually left communities and schools scraping by to make do with less, and property taxpayers to foot the bill for the income tax cuts that primarily benefited the wealthy. To improve tax fairness and build a stronger, more equitable economy, we must raise the revenue we need to make long-term investments in our people and places. These three bills would each reverse course for the LePage era tax cuts that left most Mainers holding the bill while income and wealth inequality got worse. They would provide the resources necessary to start regaining ground after years of underfunding for schools, communities, and essential services. And as I mentioned in my testimony, I also submitted testimony on behalf of the Alliance in support of this bill. But as I mentioned in mine, if we look at these tax cuts, it would fund virtually every bill before you this year to try to rationalize our care system and increase the Maine care rates for our safety net for social services and mental health and substance use. So just again, please take a look at my testimony as well. And I'd be happy to answer any questions or get answers from you, from others in the coalition. And my testimony from the coalition does have information about Mainers for Tax Fairness and who all is in that coalition. And with that, I will be happy to get you any other information.
Thank you very much, Ms. Shaughnessy. Any questions? Seeing none, thank you very much for your testimony. We appreciate it.
Thank you. And I just have to add, we don't come before here very often. This is not an issue that we usually really look at. We're be it HHS and criminal justice actually, but
it's been a while. It's been a while since I've seen you. I thought it was just the State House, but it's because you're not here either.
Exactly. But this is a critical time and it's a critical need. So thank you very much for the work you're doing.
Thank you. All right, seeing no questions, thank you very much again for being here, and welcome Sarah Austin. Following Ms. Austin will be, let's see, Patricia Kidder. Good afternoon. It's afternoon.
Yes, good afternoon. I think Senator Chipman's still listening, and Representative Terry and other members of the committee. My name is Sarah Austin, and I'm a tax and budget policy analyst at the Maine Center for Economic Policy. I'm here to speak in support of LDs 1136, 1443, and 1500. These proposals raise income taxes on the wealthiest households, which have benefited greatly from recent state and federal tax cuts, while investments that build opportunity for all Mainers have fallen behind. For example, the top 1% have benefited from over $50,000 a year in tax cuts on average when you combine state and federal tax cuts in the last decade or so. And this happened as Maine schools, communities, and other vital public services have lacked the resources that they need. The proposals would recoup some of these resources to redirect right back into Maine communities. LD 1136 and 1443 affect only the top 4% of households, according to ITEP analysis, and LD 1500 affects the top 12% of households. And the tables included with my testimony kind of give the full analysis on these bills in the side-by-side. Maine Public reported last week, Governor Mills says, even with the influx of federal pandemic relief funds, there are more needs than money to address them. NESEP agrees with that assessment. The pre-pandemic status quo left many communities without the investments they need to succeed and left them more vulnerable when the pandemic hit. Our recovery will not be complete until our tax code provides a sustained pathway to economic prosperity for all working families and children. Any of these bills would raise enough revenue to fully fund public schools, and for the first time since voters established the 55% funding requirement, and fully fund Maine municipal revenue sharing for the first time in more than a decade, and still have revenues left over to put towards other pressing needs that have been outlined in other testimony. Basic public spending, such as those, build foundations for strong communities in our state. They are critical to creating opportunities for Maine families, particularly those with low incomes. But Maine's current tax code has proven inadequate to fully fund these basic investments, in large parts because of decisions to enact tax cuts that put these investments out of reach. After years of tax cuts, Maine's income tax code today raises roughly $430 million less each year compared to a 2010 tax law. The legislature rejected another roughly $150 million in tax revenues in 2017 when it repealed the voter-approved surcharge on high incomes for education. These choices about tax policy have led to years of underinvestment. In the last 10 years, Maine schools have lost out on $2.4 billion, and communities have lost out on $700 million in revenue sharing for local services. Even in 2019, a time of record economic expansion for the country, Maine still failed to meet these basic commitments with our tax code. This committee can choose to make Maine's income tax code more adequate to meet the state's commitments. Federal funding to states and recently enacted American Rescue Plan will provide more than $1 billion of state fiscal relief to Maine. Those funds should be used to address immediate hardships for families and communities most affected by the COVID recession, and to make forward-looking investments in education, healthcare, local services, infrastructure, and social supports for families struggling to get a hold in the economy. These investments will improve our economy and make it more resilient in the future. But if nothing changes in Maine's tax code, we will face the same challenges of inadequate revenue when federal funding is depleted. We will once again be unable to fund the basic foundations of our economy. Any of these bills would also improve the fairness of Maine's tax code, which currently asks more of middle-income families than the highest income earners in our state. The income tax is meant to ask the most of those for whom the economy has delivered the most prosperity. But today, the very wealthiest Mainers pay the same top tax rate as a middle-class individual or family. Today, the top income tax rate kicks in at a taxable income of only about $52,000 for individuals and double that for married couples. In addition to raising much needed revenue to invest in strong communities, creating a higher rate for higher incomes will improve the overall fairness of our tax code. Maine must craft a tax system that is built for the long term. These bills would raise significant and needed revenue and would do it in a way that is fair. Raising the income tax on high-income households would give Maine the resources necessary to make essential investments in families, workers, and communities for the future. So MESEP definitely supports the committee continuing to work on these bills and making adjustments to the income tax so that we can meet the needs of our state. So with that, I'm very happy to take any questions from the committee.
Are there any questions for Ms. Austin? I just want to say thank you for the chart in your testimony, and I encourage everybody to please look through that. That really gives us a number crunching. You know, we were asking earlier about what the numbers look like, and this is very helpful to see what these proposed changes will bring into the state. So appreciate that. Seeing no questions, thank you very much for your testimony. Appreciate it.
Thank you.
All right. Next up is Patricia Kidder. Following Ms. Kidder will be Sean Donnelly. Welcome, Ms. Kidder.
Thank you. Senator Chipman, Representative Terry, and honorable members of the Joint Standing Committee on Taxation. My name is Patricia Kidder, and I'm a resident of Springvale, part of the city of Sanford. I'm here today to testify in favor of LD 1136, 1443, and 1500. I've watched my family, friends, and neighbors suffer. We are suffering from underemployment, housing insecurity, hunger, stress, and health issues. We are unable to pay for our basic living expenses, let alone a major expense or a car repair. We are suffering the effects of chronic poverty on our mental, physical, emotional, and financial health. The economic divide in my community is greater than it has been in years. Maine needs to invest a lot more in affordable housing. We need better access to affordable health care and childcare. We need rent and mortgage relief and affordable access to high-speed internet. Maine needs to invest more in our public schools and our infrastructure. Our roads are full of potholes and they are destroying our cars. We need more access to public transportation and affordable substance abuse disorder treatment centers. Maine's working families need more refundable tax credits. We need our state to invest more in our cities and towns to help their budgets to keep property taxes in check. And we need to create permanent living wage jobs while protecting our state's environment and working on our CO2 emission reduction goals. Maine has an awful lot of unmet needs. We may have federal dollars right now, but they won't last, and Maine will be facing a revenue crisis for years to come. If someone testifies against these bills, claiming how hundreds of people they represent will suffer and move out of Maine, please remember, wealthy people live in Maine because of our environment and our way of life. They are not going to go anywhere. Maine needs to increase its revenue flow going forward, or our unmet needs will go unfunded and die on the appropriations table as in years past. Rolling back the LePage era tax cuts for the wealthy will make our tax code fairer and provide the necessary resources Maine needs going forward. Please vote to support LD 1136, 1443, or 1500, because it is time for Maine's wealthiest citizens to pay their fair share and to help fund the programs our state needs to create a Maine that works for all of us. Honorable members of the Joint Standing Committee on Taxation, I thank you very much for your time, and I'll take any questions if you have any.
Thank you very much, Peter. Does anyone have any questions? Seeing none, thank you very much for being with us today and for testifying. We appreciate that. Next up is Sean Donnelly. Following Mr. Donnelly, we have one more person speaking in favor of one of these bills, and that is Ms. Caprera. And we'll have her speak in favor of one and against another, and then we'll move to those that are speaking against this pile of bills. So thank you very much, and welcome, Mr. Donnelly.
Thank you, Representative Terry, Senator Chipman, and honorable members of the Joint Standing Committee on Taxation. My name is Sean Donnelly, and I'm a resident of Arundel, and I'm here to testify in favor of LDs 1136, 1443, and LD 1500. Maine's current tax code favors the wealthy, with our highest income tax rate kicking in for those earning $51,700 a year. Our middle-class families are paying the same rates as CEOs and millionaires, and that simply isn't right. I live with and help care for my wife's grandmother, a retired school teacher and high school vice principal, who is very lucky to have a pension. My wife and I work together for ourselves doing animation and illustration. We make a good living wage and spend a significant percentage of our income on healthcare. We are fortunate in our house and better off than many, but it still doesn't seem right that our income tax rate is the same as those who earn 10 times as much as we do and beyond. When Governor LePage cut taxes, the lost revenue resulted in cuts to state funding for education and local services. As Mainers, we had to make up for those cuts by paying more in local property taxes and rent. At the same time, the sales tax was raised. That means our fellow Mainers who are less fortunate are paying the price for those tax cuts, since a significantly higher percentage of their income goes to sales taxes on their everyday purchases and housing costs, including property tax. 3 of my closest friends are teachers. They love their students and put in long hours doing whatever they can to help them. Each year, they put together online fundraisers to raise money for books, supplies, tech devices, and even furniture to make up for the lack of funds they receive from the state. Their parents, colleagues, students, parents, and friends, including myself, all chip in. The state is falling down in its commitment to education and asking the rest of us, including those who struggle, to make up the difference. Raising income taxes on the wealthiest Mainers is the fairest way to raise revenue for the long term to help our neighbors. We may be getting federal funds this year to help with recovery from the pandemic, but we all know folks have struggled with housing, hunger, healthcare, and more each and every year. If we want to truly invest in our communities and stop asking the least fortunate to shoulder that burden, I ask that you vote ought to pass on LDs 1136, 1443, and 1500. Thank you, and thank you for the opportunity to testify today.
Thank you very much, Mr. Donnelly, for testifying yourself today. We appreciate it. Does anyone have any questions? Seeing none, thank you. Thanks for being here. Next up is Linda Caprara. Ms. Caprara is speaking in favor.
I actually made a mistake. I was only gonna, I was trying to do the other bills, and I think I did that one by mistake, so. Sorry.
Okay, we are actually done with our, Linda, are you speaking in opposition of all of them?
I'm speaking in opposition to 3 of the ones that you're hearing now and 1 that you will hear.
Okay, gotcha.
So I can do that now if you would like.
You certainly may. We only have a little bit after that too, so we'll remember your testimony, and we do have your written testimony, I'm assuming, or we'll have it.
You will have it after this.
Okay, terrific. Great. Welcome. Thank you for joining us.
Good afternoon. Now it's afternoon. Representative Terry and members of the committee, my name is Linda Caprara. I represent the Maine State Chamber of Commerce, and I'm a resident of Winthrop. We are testifying in opposition to 4 bills today: LD 1136, LD 1289, LD 1443, and LD 1500. We strongly oppose all 4 bills because they threaten Maine jobs and the growth of Maine's economy. These bills vary in their approach to taxing high earners in the state, but the result's the same. These bills penalize the success of individuals and small businesses across the state. Such a tax will impact jobs and investments and will ultimately shrink, not grow, Maine's economy. If these bills pass, you might assume there will be no change in taxpayer behavior and that revenues would continue to come in. We would argue that's not true. Folks in the higher income tax brackets are the most mobile. They can locate anywhere and do not have to stay in a state with high taxes. Our testimony on these bills is really no different than our testimony on earlier bills that propose the same increases on Maine's high earners. This proposal would no doubt hurt small businesses, which include high earners. In Maine, approximately 75 to 80% of businesses that are established as LLCs, partnerships, or subchapter S corps. In those instances, the income from the business flows through to the individual taxpayer. Thus, she or he is responsible for paying the income tax directly. So income taxes and the amount of income taxes paid are very important to the majority of businesses, especially small businesses in Maine. Paying higher taxes would definitely impact the amount a business owner chooses to reinvest in their business in terms of capital and personnel. Failure to reinvest, as you know, can have a direct impact on growing the economy and job creation. Over the years, reducing individual income taxes has been one of the top priorities for Maine's business community. The legislature has largely agreed, making significant strides over the years to reduce personal income taxes across the board for Maine people. Back in 2011, the legislature lowered income tax rates, resulting in the elimination of income tax liability for approximately 70,000 Maine taxpayers, not just for high earners. In fact, middle and low income taxpayers benefited significantly from this change. The proposal included a reduction in the top marginal rate from 8.5 to 7.95. Then again in 2015, the legislature came back and lowered that again to 7.15, where it remains today. So reducing the state's income taxes are at the forefront of keeping the Maine economy competitive. I would cite again, as I did earlier, that the analysis that was conducted in 2016 by the Office of Policy and Management, which looked at this issue because it was on the ballot, as you recall. The study concluded that a 3% surcharge on incomes over 200,000 would have a negative impact on Maine's economy, including reductions in employment, population, labor force, income levels, and economic output. The analysis showed that just 3 years after implementation of the increased tax rates, it would have had a resultant reduction to private employment of between 1,900 and 6,600 workers, a negative impact to real disposable income by $270 to $800 million, negative population impact of up to 3,800 people, and a negative economic impact of up to $320 million. Thankfully, in 2017, the legislature reversed that disastrous referendum and Maine was spared the economic fallout that would have followed. LDs 1136, 1289, 1443, and 1500 represent the exact threat to Maine's economy that question 2 did back in 2016. In addition, all 4 bills represent a public policy that is opposite to the stated goals of the state's 10-year strategic plan, and that is to grow the economy by increasing jobs, wages, and value of product. High personal income taxes have always had an impact on businesses' ability to recruit skilled workers like physicians from all over the country and the world, for that matter. Businesses tell us time and time again that high income taxes are definitely a consideration in the relocation of any new employee, and why wouldn't they be? We often hear that executive decisions are made to locate in a particular state based on their own income tax liability, and that hurts entrepreneurship. In looking around the country, it appears things are changing and people are clearly taking note of how states handle personal income taxes. Every day there's articles in the paper about how there's an outward migration of folks from states with high tax burdens to states that are tax friendly. Folks are leaving states like New York, California, and moving to states like Texas and Florida. I doubt this will end anytime soon. The global pandemic resulted in the traditional workforce shifting to remote work, and it is likely even after this pandemic is over, it's going to remain that way. The pandemic has forever changed the way people think about where they live and where they can work. They don't have to live in high tax states. We should all be doing all we can to make sure we don't worsen our reputation by enacting legislation contained in these bills. And you may say, well, folks are moving to Maine, and they are, but that doesn't mean they're going to stay here when bills like these are enacted. So we would urge you to please vote ought not to pass on LDs 1136, 1289, 1443, and 1500. I'd be happy to answer any questions.
Thank you very much for your testimony. Representative Sachs has a question.
Thanks so much. Good afternoon, Ms. Cabrera. Thanks for being here today. So I was looking for your written testimony. I'll look forward and I promise you I will read it when it gets there. And I'm wondering if you can include in it, we've gotten quite a bit of data today, including significant testimony from several folks, Institute on Taxation and Economic Policy, et cetera, that talks that, but I would say directly contradicts the testimony you've done today about migration of high earners. We've heard in this committee time and time again from folks like Maine Hospital Association that there's no actual data around that as well because they're in the process of recruiting. I'd love to see, I know I've asked you for this before, there's significant data around the fact that trickle down economics is not a viable theory for economic growth. So I just would really urge you, if you could put actual citations in your testimony, I would love to review them. I really appreciate it. Thank you.
Yeah, I'll try to look for that. I just do want to also tell the committee, I did look at the incidence report that's online. Maine Revenue Services has it online on their website. The top 5%, the top 1% pay the over 23% of the taxes, income taxes in the state of Maine. The top 5%, if I'm reading that right, pay almost 47%. That's huge. That's almost half the taxes, the income taxes in the state of Maine are paid by that top percentage. So when folks are saying that they don't pay their fair share, what do they call fair share? We think that they are paying their fair share. And again, it's penalizing folks that are really out there trying to do really hard and be successful. So I will try to include that as well, but I urge you to go on the website and look at that incidence report because it's kind of eye-opening.
I would love that, if follow up, if I may, Madam Chair. So I would love that. And when you're talking about the top bracket, is that what has been oft referenced this morning, that includes people from 51,000 all the way up to millions of dollars in that top?
I'd have to look at the bracket. I don't know exactly. I don't even know where they're obtaining their numbers. So I really would have to look at, I'm going to rely on Maine Revenue Services and what they have determined. I don't know these other, reports or studies that they're referencing. I have no idea where they've come from, but I will definitely look at Maine Revenue and what they have put together because that's based on actual data from the state of Maine.
And that's why I'm trying to clarify that actual data is what folks have been saying this morning, I believe, is that top bracket includes anybody who makes a mere 51,000 all the way up to millions of dollars. So that's very edifying. Thank you.
Representative Matlack.
Thank you, Madam Chair. I heard Ms. Caprara talking about speculative results from increasing taxes and decreasing taxes. And I just wanted to mention that the Center for on Budget and Policy Priorities actually disputes that and talks about several years ago when the state of Maine cut personal income taxes and that rather than boosting the economy, it was a slower growth in the economy. And that they say that there's evidence that raising income tax rates doesn't harm a state's ability to compete economically with their neighbors. So I'd be interested in knowing the source of your data on where the fallout would come from if we were to increase the taxes. Thank you.
Absolutely, I can provide that to you. That was testimony given by the Office of Policy and Management. They did an assessment. This is the state that did an assessment on the referendum that was being proposed at the time. So this is something that is in record, and I believe I can find it here, so I can forward that for the work session. Absolutely.
Thank you, and I appreciate that because many studies recently have shown that Maine, because we cut our taxes at that time, our recovery from the 2009 downturn really was stagnant. And that the idea that increasing taxes will slow the economy is a moot point, and that it's not supported by data. Thank you.
I would also recommend reading about, I believe it was Minnesota at the same, perhaps the year before that referendum, they imposed a similar change in their tax policy, and it did not push people out as it was feared that they would. So, check with that as well, for sure. Any other questions for Ms. Caprera? Seeing none, thank you very much for your testimony. We appreciate you being here. Next up is Ben Lucas speaking in opposition. Following Mr. Lucas will be Mr. Cashman. Let's see. All right, I'm promoting both of you, so you'll be in cyberspace for a minute.
Good
Welcome,
morning,
Mr. Lucas.
or
How
good
are
afternoon.
Oh, yeah.
Senator Chipman, Representative Terry, members of the Committee on Taxation. My name is Ben Lucas. I live in Portland, and I serve as the Executive Director of the Maine Jobs Council. I am here today to testify in opposition to LDs 1136, 1443, and 1500. Among American states, Maine currently ranks number 46 for our business environment and number 37 for our economic strength, both of which are the lowest in the New England region. One of the primary reasons is that we already have high taxes. Maine currently has the 4th highest tax burden in the United States. The proposed legislation today would all raise taxes and make it even less likely that Maine would attract or retain foundational jobs, innovation, and investment. At a top rate of 7.15%, Maine's income tax is currently the 11th highest in the United States. The proposed legislation today would create top brackets of 10.15%, 12.4%, or 13.15%. This would put us in a category with only California and Hawaii, one of which is one of the more wealthiest states in America, and the other is an island thousands of miles away from the mainland where shipping and isolation make everything more expensive. There is a direct connection between our high taxes and low economic rankings. If this legislation passes, Maine will be even less competitive with other states and will be less likely high earners, innovators, leaders, and jobs will move or stay here. Maine could be a destination state, and that is a better way to grow the tax base. Maine is currently ranked the safest state, or consistently ranked the safest state in the nation, and consistently ranked in the top 10 for our natural environment. It is a wonderful place to live, and if we improved the business climate to attract investment, innovation, and jobs, we could have a broader tax base, and ultimately that would create more money for government programs and social programs. Last week, the Revenue Forecasting Committee stated that Maine's income is projected to increase by $462 million this year and $460 million next year. That is well ahead of the projections from when COVID-19 started. As we are also aware, there is also a record amount of money coming into Maine from the federal government. Right now, there is no need to increase taxes. In closing, the Maine Jobs Council respectfully requests that this committee will vote ought not to pass on the proposed legislation. Thank you for allowing me to testify. I will submit a version of my written testimony, and I'm happy to answer any questions.
Thank you very much, Mr. Lucas. Does anyone have any questions? You are all set. Thank you so much. Thanks for sticking with us.
Yeah, thank you, Representative.
All right, next up is Andrew Cashman. Following Mr. Cashman will be Jessica LaLiberty. Welcome, Mr. Cashman.
Thank you, Representative Terry, distinguished and Senator Chipman, and distinguished members of the Joint Standing Committee on Taxation. My name is Andy Cashman. I'm a partner at Putty Flaherty, here today on behalf of my client, the Maine Association of Realtors. We are in opposition to LDs 1136, 1443, and 1500. And I did file written testimony, I know it's been a long morning and going into the afternoon here for everybody, so I'll try to be short. We have the same concerns over increasing the income tax and thereby making Maine among the highest tax states in the country, especially during a pandemic when the economy itself is quite fragile. We also have concerns around the impact that has on businesses that pass through to individual income tax returns, and the ability for Maine to be able to attract professionals that are earning in the income range that's being discussed here, but that are not millionaires or billionaires, has been repeatedly referenced. We also have concerns over the relative income tax rate as it relates to New Hampshire, which of course is nothing, and then Massachusetts, which has a flat rate that's less than half of what our highest rate is. So we think that the timing of the bills is very troubling. It was just referenced in the prior testimony, but given where the state is financially in terms of those revenue forecasts, over $450 million higher revenue than was projected, there's a surplus of revenue as it is, and there's no reason to increase taxes to increase revenue at this time. And that's outside of the over $2.5 billion that the state has received from the federal government. I would also just say that I think that there's two arguments that maybe, as I see it anyway, seem to be being conflated. There's the argument about tax fairness and where those brackets should be set. And I think that is, in my mind, can be a separate argument from whether or not taxes should be increased. Overall, in terms of, generating more revenue into the state, that's an increase, right? So I think that those two things are separate, and we oppose increasing the income tax at this time for all of the reasons that I've stated, would therefore respectfully urge the committee to vote ought not to pass on 1136, 1443, and 1500. And I appreciate the committee's time. I'm happy to answer any questions that the committee may have.
Thank you very much for your testimony, Mr. Cashman. I have a just quick, so I just want to make sure that I heard that right. So you would not necessarily not be in favor of changing the brackets themselves, just not just not an increase in the percentages.
Yeah, I mean, obviously, in terms of the official position of the association, we would need to take it back to the committee and we'd have to take a look at that. But I do think that it's important to note that, in a lot of the testimony in favor, been hearing a lot about that it's unfair about millionaires and billionaires. And that's different from what these proposals are saying, which are taxing people that are earning $200,000. And somebody that earns $200,000 is not earning a millionaire salary. So I think that, when we're talking about income tax. And so presumably when people are talking about millionaires and billionaires, they're talking about income that is millions and billions a year, or a million and up, right? And so what we're saying here is that these just aren't speaking to that. But, there may be some discussion around fairness in terms of the tax rates, but the overall level of income coming in, we feel should not be being increased at this time because of the concerns we have around the economic impacts and the other issues that I've raised.
Great, terrific. Yeah, I would imagine as a realtor, it would be difficult to find a house that was affordable for someone who was making $50,000 a year.
Yeah, and that's why we've been very supportive of affordable housing legislation that we think addresses the core problem there, which is building more supply. And so we're encouraged by the governor's proposal that she put out yesterday about dedicating, I think it was 150 million, if I remember correctly, towards that. So yes, thank you, Representative.
Great. Any questions for Mr. Cashman? Seeing none, thank you very much for your testimony. We appreciate it.
Thank you all for your time.
Thank you. Next up is Jessica LaLiberty. Welcome.
Thank you. Good afternoon, Senator Chipman, Representative Terry, and members of the Joint Standing Committee on Taxation. My name is Jessica LaLiberty. I am the Policy Relations Manager for the Manufacturers Association of Maine, a nonpartisan, pro-growth, pro-manufacturing trade organization representing about 400 manufacturers and the 29,000 workers they employ. We are here today in opposition of LDs 1136, 1443, 1289, and LD 1500. Maine supports tax policy that positions Maine as a business-friendly state and provides certainty and stability to all Mainers. These four bills before you today all seek to increase taxes. Just last week, the state's Revenue Forecasting Committee released information which indicates the state's economic situation is better than before the start of the pandemic. According to this nonpartisan committee, the state general fund revenue is projected to be $83 million higher than pre-pandemic forecast for fiscal year 2021 and approximately $58 million higher for fiscal year 22-23. Governor Mills has repeatedly pledged no tax increases. Her administration has testified in opposition to several bills before this very committee this session seeking to increase the tax burden upon Mainers. Maine is already one of the most highly taxed states in our country. Given the rosy economic forecast and the governor's pledge to hold the line on taxes, it is our belief that these bills would stunt the economic progress being made despite a worldwide pandemic. These bills seem to directly conflict with the state's 10-year economic plan and the chief goals of that plan to increase the gross domestic product, increase the annual wage by 10%, and grow our workforce by 75,000. If this legislature truly believes in the economic plan for the state of Maine, you should be creating a tax policy that promotes business growth and creates jobs, not seeking to increase taxes. The Manufacturers Association of Maine opposes LD 1136, 1289, 1443, and LD 1500. Thank you for your time and consideration.
Thank you, Ms. La Liberty. Does anyone have any questions? Seeing none, thank you very much. We appreciate you being here. I am just refreshing our tax page to make sure that we're not missing anybody, but it looks to me like we've exhausted our folks testifying today. Looks like we're good. So this closes the hearings on LD, let's see, 1136, LD 1369, LD 1443, and LD 1500. Next up is LD 1289, sponsored by our very own Representative Joe Perry. Welcome, Representative Perry.
Okay, thank you, Madam Chair and members of the committee. I was trying to pull up a little summary, but I guess I was a little slow to the game, so I will just tell you from memory what it is. It's LD 1289, and it's actually a bill that was written by my senator here in Bangor, Senator Joe Baldacci, and was ruled that as a revenue raising bill on one half of it, that he really couldn't be the prime sponsor. So he asked me if I'd be willing to sponsor it. And so it essentially does create a new income tax bracket of, I believe, 7.95%. And it will over the next few years, ramp up the homestead exemption from 25,000 to 35,000 next year, 45,000 the year after, and 55,000 ultimately in 3 years. And as we all know, over the past 10 years, a lot of costs have been shifted onto homeowners and property taxes in Bangor. Bangor says $5 or $6 per thousand of our mill rate came from cuts from the state in education, general assistance, cuts to the county for jails has ended up on our property taxes. The homestead exemption is very meaningful to the people of the state of Maine. In my district specifically, it's $600 off our property tax bill. If we were able to get that up to 55,000 of exemption, it would be $1,400 per year off someone's property tax here in Bangor. It'd be more in some communities, less in others. So it is a conversation certainly worthy of consideration to give direct property tax relief to the people who have suffered the most with the tax shift, and put a little back onto income taxes. So that's the bill. I'd be happy to answer any questions.
Thank you, Representative Perry. I have a quick question. So I just want to make sure that I have it right, since I don't have it in front of me.
Mhm.
This creates a new tax bracket that is at 7.95%. Do you know what the income of that bracket is?
Yes, thank you for asking. It's 300,000 for single, 450,000 head of household, 600,000 for joint filers. Yes, thank you. I forget to mention that part.
Okay, thank you very much. And it just adds one bracket at a new rate. Okay.
That's it. Very simple, easy. We ought to be able to agree on that. Easy enough, right?
And that pays for a property tax relief program. Okay.
That
right.
pays for the expansion in the homestead exemption. Yes, it's always been a pet peeve of mine, these huge tax cuts that don't come with a way for paying for them. So that's my philosophy. If we're going to propose a huge tax cut. We ought to give a little direction on where it might come from.
Terrific. Great. Any questions for Representative Perry? Seeing none, you can't leave. That being said, we have no one here scheduled to speak in favor of the bill. Ms. Caprera already has spoken against the bill. So this will close the hearing on LD 1289. I will remind everybody that there is a lot of written testimony on all of these bills. Again, I encourage you all to read them thoroughly. We have some testimony from a rather famous person in there as well. So find it and you win a prize. This I believe closes our public hearings for the day, unless Julie, you have anything for us?
No, but I've already found the famous person.
Excellent. I would remind everybody that he does live in Nevada, not in Maine, and this is about Maine income tax. So Julie gets the prize. She said it first. Avery, do you have anything for us?
I do not.
Okay, terrific. In case you haven't read your emails yet, our session scheduled for next Thursday has been canceled. We wrote our schedule out in anticipation of that, of adding Monday to our schedule. We'll have a discussion between the chairs and leads and Julie and Avery and see if we can't move ourselves back to Thursday, since that's our usual time and hopefully doesn't interfere with everybody's normal everyday weekly schedule. So we'll chat about that within the next couple of hours and let you all know. Alrighty. Anybody have anything else they'd like to announce or talk about? All right. Have a wonderful afternoon. Enjoy the sunshine. It's gorgeous in Gorham. I hope it is where you are too. Have a good afternoon.